11 años en BBVA ayudamos a las personas a tomar las mejores decisiones financieras, con iniciativas que han impactado en 13,4 millones de personas. Pero queremos ir más allá. Queremos formar parte de un movimiento global. Por ello creamos el Centro de Educación y Capacidades Financieras, una plataforma para todos aquellos que contribuyen a empoderar a las personas en sus decisiones financieras. Bienvenidos.
Hola. Hola, buenos días.
Good morning, everyone. Good morning and welcome to the EduFin Summit 2019. As you know, this event is a point of reference for financial education, and it is organized by the Center for Financial Education and Capabilities of BBVA. My name is Elena Diaz Fuentes, and it is a pleasure to be your host in this third edition that is being held for the first time in this wonderful BBVA headquarters. In today's session, we have put a lot of work and we have plenty of interesting speakers. This is going to be an intense session. But this session is going to focus on the challenges in the industry and also the significance of digitalization as a key component to improve financial education for everyone. Before presenting the program for today, and to give you an official welcome, we have the head of Global Economics and Public Affairs of BBVA, who's also a board member, and has said about today's topic that our mission as a bank is to make available for everyone the opportunities that this new era brings. We work with our customers to offer them the best banking solutions that help them make the best financial decisions and in this way have a positive impact in their lives. So let's welcome José Manuel González Páramo. Welcome.
Bienvenidos todos a...
Welcome everyone to BBVA. I see lots of familiar faces. This is becoming a very big family little by little. It's a true honor for me to be able to welcome you on this annual summit, just like I've done in the last two editions for the Financial Education and Capabilities Center. Many of you were probably in Mexico in our initial event 2 years ago. It truly was a success in terms of attendance, and we counted with the presence of several important figures. Then we had another event in Buenos Aires. That was another milestone, and we thought that this year was a good opportunity to host this event in Madrid. There's a lot of interest in this event, and so that tells us that we are at a key moment for financial education. So I just wanted to briefly talk about three main topics. First of all, the context in which we are discussing financial education. Second, the role that this Center for Financial Education and Capabilities wants to play. And thirdly, I'd like to talk about the agenda that we are going to cover over the next 2 days. So let's begin with context. Why is financial education particularly significant nowadays? This is not a new topic. First of all, we are under the impression that it is more significant now because people are becoming more aware of the fact that this is a universal problem that affects everyone. We receive education, but also we try to work to improve the situation. We receive financial education for children, for young people. We need to manage earlier and earlier these financial issues. We need to think about pensions. We need to think about how to find funding for a company, and these decisions require financial education. And there's more and more public authorities, ministries, regulatory commissions, central banks. Tomorrow we'll have the governor of the Bank of Spain here. All of these figures are concerned about these issues, as well as the private sector. And I think that BBVA's participation and some financial institutions' participation prove this. So, first of all, the challenge for financial education is very universal. Secondly, and we've talked about this plenty of times, but people don't really talk about this. Money is usually the factor that causes the most stress for people. Why? Because it is a complex factor. It seems very easy to understand why we use coins or why we use money overall. But when we think about how much money I have to set aside for my retirement so my lifestyle doesn't get worse, or how can I work with the balances of my company so its future is not threatened, these type of decisions require a minimum standard of financial education so we don't make mistakes that might lead us to very negative consequences. We are convinced that stress associated with handling money would reduce significantly if people had a minimum standard of financial education, and of course supported by external components such as the financial system, digitalization, and these are topics that we're going to talk about today. And thirdly, the third reason for this interest in financial education, I believe, that is because we are more and more aware of the fact that the level of financial education has a quite significant impact on economic performance overall, meaning economic stability. Let's remember debt in the years leading to the crisis. We don't really know what went wrong there. Probably everyone made mistakes, regulators, companies, financial institutions, but also those that took up debt that they were not able to return without threatening the stability of the companies or financial institutions. So it is important for financial stability and for economic performance overall because it has to do with investment, with diversification, with the capacity to innovate. So there's a number of reasons that combined make financial education particularly relevant nowadays, even if it's not something new. We are living in an era of disruption in terms of technology, but also in terms of demographics, migration, climate change. All of these are factors to take into account. There is a need to invest resources and address these topics. What are the most relevant factors that determine financial education? I think that, first of all, there's social economic changes in emerging and developed countries that have entailed an increase of per capita income and the need to manage savings, which is great because it provides us with plenty of opportunities. If we don't have savings, then we cannot do anything. But at the same time, we have to use these savings wisely and in the right amounts. There's another issue, less positive, that is the increase of debt levels. The debt level nowadays overall, all over the world, is superior than that one before the crisis. This doesn't really have immediate consequences, but we should think about the implications, about how to manage this in the future. And then, in terms of people, the increase of life expectancy is a great thing, particularly those of us that are already at quite an old age. But at the same time, it requires us to manage better. If we started saving thinking that we were going to retire when we were 65 and we would survive for the next 10 years, probably so were there mistakes. In Spain, currently, we have the longest life expectancy in the world. It has surpassed Japan already. This is good news, but it's not really as good if we don't really have the means to face these life expectancies. So people need to understand the three pillars of pensions: the public, the company, and the individual pillars. I think that is some service that we can provide for those who don't really want to change their lifestyles in the future. The increasing complexity of financial products is another factor that emphasizes financial education and its importance nowadays, because even though regulators are taking action nowadays trying to limit that complexity, it is a fact that the variety of products that are at our disposal is so large that if we don't have a minimum standard of financial education, it will be hard for us to choose the best fit for us. Financial institutions can help us here, as well as all the support that we can receive from the digital area. But we need to really understand the concepts and the ideas before resorting to this new type of support. And thirdly, digital transformation. It can help us improve lifestyle if we manage it properly, but at the same time, we need to be aware of the fact that it's changing demand for financial products in the industry. There's an entire new generation that is being incorporated in the job market, the millennials, so to speak. Now they rule the market. And they are quite different from digital immigrants in terms of the demands that they have, how they compare the products, how loyal they are to brands or financial institutions, what they want money for. It looks like millennials don't want to own cars now. They don't want to own assets. So it's a new world. And it's good to understand this. It's good to make sure that they understand this world. And as for offers, we have new players. We have fintechs. We have other types of new companies. And this whole new variety that could be beneficial for all of us, because variety is always beneficial because it gives us the opportunity to choose at a lower price, also requires to process tons of information, and maybe we are not as ready for that. So in this setting that forces us to take action, we believed that we have a role to play in BBVA. Elena explained really well what our mission is and how we understand our contribution to have a positive impact on people's lives through finances. And that's the reason why in 2017 we decided to take a big leap from the experience that we had. After 9 years working intensely on financial inclusion and education, we finally created this Center for Financial Education and Capabilities with the aim of spreading knowledge about financial education, promoting research, and allowing access to the best practices for the entire global community. The center is now a very solid reality. There's a virtual platform with relevant content on financial education. It can be accessed. And it's a very way to support knowledge exchange. Ever since it was created until June 2019, the center and the website of the center has conducted 209 studies, 113 best practices that are international points of reference. There's 4,500 active users that interact with each other, and they receive the newsletter and the main news of the center. So, to put this in context, to decide the next steps, we meet at this EduFin summit. We start in Mexico with the main goal of knowing what we really know about measuring financial capabilities and how cognitive and emotional trends affect decision making. This is very, very relevant. The Nobel Prize was actually acknowledged just because of this, what our biases are that lead us to make wrong decisions. In Buenos Aires, we focused on the analysis of the role that financial education has to tackle the challenge that the United Nations took on in 2015. This challenge is complying with the 17 Sustainable Development Goals, and as you know, financial education contributes to 4 of these goals: ending poverty through financial inclusion, guaranteeing a healthy lifestyle and promoting welfare, gender equality, and finally, the specific financial education goal. It's one of the most relevant chapters of the overall education goal. In this third edition, we are going to focus on the implications of digitalization for financial education. They've always been there. They've always been part of our discussions, but this year they are the main focus. On today's sessions, we are going to focus on putting digitalization in context, talking about its challenges, its opportunities, to improve financial inclusion and financial capabilities. And there will be 2 sessions in which we will show the best practices in different parts of the world. The second session tomorrow will have the governor of the Bank of Spain, which is an institution that is involved and that leads financial education efforts in Spain. We have Mr. Tejada here, who's representing the institution. Thank you for being here. And we also have the president of the bank, who is completely involved and shares the goals that we're trying to achieve with this center. So tomorrow we are going to talk about the use of digitalization to improve capabilities and financial health. For example, big data or artificial intelligence will be the focus of tomorrow's session. And to wrap up, I'd just like to thank, and if I could actually raise my voice even more, I would. I'd like to thank all of the people that Lidia del Pozo, Tony, who's not here, I don't know if he couldn't attend, and Adriana, Diana, she's on a medical leave, and I'd like to thank her for putting so much effort to have everyone ready in this conference room, this auditorium, so we can start having our discussions. I've had quite a few years of experience as a professor of economics, as a banker, as an economist. So I think it's increasingly clear that investing in educational knowledge is the investment that provides the highest return, also from the social point of view. Thank you very much.
Gracias, José Manuel. Bueno, pues.
Thank you, José Manuel. Well, as you've seen, José Manuel gave us an overall overview of the sector, of the industry, and of today's session. He's actually done my job. And he's given us that overview about why everyone is interested in financial education now. This is not new, but now is particularly relevant. Even the Sustainable Development Goals of the UN, 4 out of the 17 goals have to do with financial education. As José Manuel was saying in the end of his speech, all of the speakers that we have invited to this summit have very impressive resumes, and particularly long resumes. That's why we decided not to talk about the resumes. We have the internet, which is wonderful. You can type their names and you'll find all of their positions, all of their diplomas. So we're just going to say the main title that they have, the position that they hold right now. So please, no one gets offended. You can also tweet with the hashtag that you saw in the beginning. We have a YouTube channel too. The hashtag is BBVA EduFin Summit. The YouTube channel is BBVA EduFin. We are doing streaming, so I'd like to say hi to everyone that's watching us on streaming from the office, from home, while drinking coffee. And please remember that we have simultaneous interpretation. I'd like to thank the interpreters. They do a great job. We have English into Spanish and Spanish into English interpretation in case you need it. Any questions so far? We have a keynote speaker and a roundtable before a coffee break. And speaking of interpretation, I'd like to switch to English.
Keynote speaker of today, of this summit. And was researching for this summit, I came across a survey in the US that found that 4 out of 10 American workers are not saving for retirement. José Manuel was mentioning it. A lot of people, we haven't even thought about it. How can digitalization improve an individual's financial health? I wonder. And how can it improve the financial health of an entire society? Well, to give us a global vision on digitalization's scope and its relationship with the financial health, We have with us the head of the Financial Affairs Division at the OECD and Executive Secretary of the International Network of Financial Education. No wonder she is one of the world's most respected voices in financial education. Please, let's welcome FloreAnne. Merci. Bienvenue, FloreAnne. Florent, do you need...
Buenos días. Muchas gracias, Elena.
Welcome.
I will continue in English. Good morning, everyone. Let me start by thanking BBVA very much for inviting me and also, of course, congratulating them on this very important initiative. I'd like to mention that Lydia and Tony have been partners in financial literacy for a very long time, and BBVA is a key partner of the OECD, especially sponsoring for 3 exercises the PISA financial literacy. And just a little bit of auto-promotion before I start. The presentation will have the 3rd edition of the PISA results released next May 2020, with a number of countries covered. So of course we'll invite you, and we'll be pleased again to partner with BBVA for that launch. But today I was asked to focus on digitalization and financial health, and you will notice that I use digitalization and not digitize. Okay, because I can't pronounce it. That's the reason why actually you got it. So as you know, well, terminology is important. At the OECD, we use digitalization, which is also often used at the G20 level. So that's the reason why. But basically, we are covering, I guess, the same issues. And financial health. So when I was thinking about this presentation, I thought first of financial health, because to be honest, digitalization is a topic that is very important at the OECD. We've been working now for 4 or 5 years across the board on the financial aspect, on employment aspect. So this is something, I wouldn't say that we know well, but this is something that is not necessarily conceptually that difficult to grasp for us. But financial health was interesting because in the world of financial education, financial literacy, financial capability, you see I've already used 3 terminologies. This is the kind of concept that we generally use. And increasingly people are speaking more about financial health or financial well-being. So what does it mean for our topic, and what's the connection with digitalization? Actually, I like to say that I like the analogy between financial literacy and financial health, perhaps for 2 reasons. With financial literacy, which is the terminology that we use at the OECD, and financial health, we are doing something today that is not necessarily that easy. In one case, perhaps dieting, perhaps running in the morning, perhaps avoiding eating a croissant and rather having an apple. So trying to do something today that is not necessarily what we want, but may help us in the future to have better choice, better life. So doing something today for tomorrow. And with financial literacy, it's a little bit the same thing. You need to plan your budget. You need to think about the future in order to make sure that in the future you have choices. So in one sense, these 2 are connected. The second aspect I thought was interesting in terms of this 2 terminology or 2 aspects of life, let's say, is that with health, we are not all necessarily lucky. We all bear some typical DNA, which may imply that we are more prone to this or that disease. But at the same time, if we have a healthy life, as I said, dieting, exercising, there is a lot of hope, and of course doctors will be telling you that in terms of preventing a number of diseases, having a healthy life is giving you more chance to live longer and in better health. Well, with financial literacy, it is a little bit the same thing. There are things that are difficult for one individual or a family to completely control, perhaps the country in which they live, some cases, perhaps even access to finance, level of income, but there are also a range of issues that they can control and be responsible and have ownership on and being empowered about. And this is, again, being able to do a budget, trying to think about the futures and ways of saving, using credit responsibly. So again, there is these 2 components, aspect that families, individuals have little control on, and aspects on which they can actually take control of their own life, and again, make choices to improve ultimately their well-being. And this is my last point on this terminology issue, is that what is perhaps less important than financial literacy or even health, the focus is really on the outcome. And the outcome here is improved well-being. With health, it's the case. You're not dieting or exercising just because you want to have a good health, but because you want to live longer, feel happier in the future. Similarly, you are actually budgeting, planning for the future, not because you think it's fun to save, but clearly because you want to have more choices or give more choices to the children in the future. So very important that we all focus not only on the process, on the competencies, on what consumers should or should not do or be responsible for, but perhaps have a positive message that all of this is done so that the outcome is a happier and better life for families and individuals. And I think this way we can also avoid what sometimes and see in some countries or in some discussion is putting the blame on consumers, which is not what financial literacy is about, certainly not. It's giving them the choice in their life, in the present and in the future. So I wanted just to start with this analogy because I thought it was interesting. And of course, digitalization can help with financial health. We will see, and of course there are sessions later today that there are risks that are linked to digitalization, but there are also great opportunities in terms of educating people, in terms of also addressing some consumer biases. So I will go through this. I have more or less 4 components in my keynote. First one, very looking at the implication of digitalization, so what it means in terms of opportunities, challenges. Second one, I will look at some of the policy response that are happening in your countries, but also that are happening at global level, and what the OECD is doing on that. Then I will talk a little bit about our future work on digitalization and financial literacy, and last but not least, I also want to give you a quick snapshot of what we are doing beyond financial literacy on digitalization. So let me start. Of course, why is digitalization important from a consumer point of view for financial health? This is, of course, the first part of the presentation. Well, I think this is relatively obvious, so I don't think I will spend a lot of time on numbers. We all know that access to mobile and digital financial services is increasing. Globally, 60% of the adult population already have access to mobile or digital financial services, so this is enormous. And we will reach almost 3 in 4 individuals in 2025. So that means that indeed access to finance is being improved by digitalization. This is a clear fact. On top of that, of course, digitalization also means new ways of doing business, new types of products, new types of providers, and of course also new types of risk and challenges. And this is why actually we do believe that policymakers and actually also the private sector should also think of this implication when it comes to consumers, but I'd like to add also micro and small entrepreneurs. So the slides here also show the increased usage of internet, which is increasing at a very rapid pace and is of course accessible more and more, not only in developed countries, but in developing countries as well. So the benefits, well, there are many, and I'm sure you're already all convinced of the benefit of digitalization. I'd like to say that when I'm traveling or discussing with countries, we are now also at the OECD supporting a number of countries in developing their national strategy for financial literacy. I get a lot of questions on whether, in terms of delivery channels, we should all go digital or should we keep, paper-based. I think my view is that we are still very much at a crossroad here. We are in a transition phase where a lot of change are happening on digitalization, and to be honest, it's quite often difficult to catch up for policymakers, but also for my organization with the very rapid change in digitalization. But at the same time, there is still this old world and a large group, part of the population, that either have no access to digitalization or do not have the competencies to deal with that. So we still need probably to keep these two worlds together for some time. And this is the difficulty, the uncertainty, and how to strike the right balance between these two approaches. Anyway, in terms of digitalization, of course, there are many benefits for consumers and, again, micro and small entrepreneurs. In terms of improved access, I said it at the beginning, this is the clearer fact. Digitalization do offer possibilities for people with no access to banks, financial institutions, to have a bank account, to have credit, even saving opportunity, insurance opportunity, pension opportunity. There are fantastic examples in Kenya of actually possibility of saving for retirement through your mobile phone. So certainly this is an improvement. This is an improvement also in terms of identity checks, and this is especially important in developing countries, but also now for example, refugees who may not have necessarily an ID, so that provides them with the possibility to get access to financial products. The second part is, of course, that digitalization means cheaper products, mean also, in principle, easier to use products, and also products that are more adapted to consumers' wishes, especially, of course, young generation wishes, and also a way to provide information that can be consolidated. And here, I'm also, of course, thinking of API, which, if well implemented, could provide consumers with the opportunity to get all their information, financial information, in just one app. And also, and this is one of the benefits of digital financial services and digitalization, and I will come back on this later, digitalization is also providing a unique opportunity to build competencies, to improve financial education, and in ways that were not really possible before. So this, I will come back to this because I think it's a very important message here, and especially if I just can give you a teaser on what I will be saying next. Very importantly, one of the challenges of financial education is consumer biases. People tend to postpone the decision to tomorrow, they tend to procrastinate, etc. Well, digitalization is offering option to address those challenges. So this is why I do believe this is a unique opportunity for financial education. Well, but there are risks. And of course, at the OECD, we are looking at those risks quite seriously. And I know that we'll be discussing this today as well. There are three types of risk. Those are market-driven, with misuse of digital products, issues around disclosure, issues around safety net of data, of course, issues also around perhaps sometimes easier access to products such as short-term credit. Second area of, risk, of course, is around uneven regulation and supervision. So digitalization is, again, very, very fast, and policymakers have a hard time catching up. So it means that regulation is uneven within countries among different types of providers of digitalization financial services, but also is uneven across countries in some cases, making it very difficult for consumers to know whether they are protected or not. And there are also risks related to consumer, and I just mentioned it at the beginning. Consumers have behavioral biases that makes digitalization more challenging for them. At the same time, if we simply look at level of financial literacy and digital literacy, they are still low in most countries. At the OECD, we have data on that, and the situation is improving very slowly. So that means that a lot needs to be done, and this risk have an impact, of course, on consumers and small businesses in terms of perhaps uneven trust in digital financial services when it comes to market failure or safety net of data, but also new types of exclusion, of course, because not everybody is digitally savvy, not everybody has access to mobile or online financial services, although, as I mentioned at the beginning, the situation is progressing very rapidly, but there are risks around exclusion of elderly population, for example, low-income groups, and there are other types of risk that I would like to underline. The fact that increasingly fintech financial institutions are using digital profiling is a good thing in one sense because they know their consumer better, they know the risk attached to consumer better, but at the same time it means that some consumer will not have access to credit or insurance, or they will have access to insurance but at a very, very high rate when because they are bad risk. And it is, I think, if I just consider insurance just for 1 minute, I think it's especially an issue for health insurance and life insurance as well. Because bad risk, so typically people who will have a problem with their health will have difficulty in finding appropriate insurance. So also something to be considered not only by financial institutions, by the way. I think it's a society issue, it's an ethical issue, so it should be really discussed in this group, but beyond that with all involved stakeholders. Of course, there are also vulnerability to mis-selling, phishing, data theft. So a number of risks, and it's not the end of the world. With each changes, of course, comes some risk. The issue is how do we address them? So let's look at the policy response from countries, but also from the international community. From country, I have to say that the catch-up has been a little bit slow. And here I'm only focusing on the consumer approach to those risks. I'm not looking at the supply side because we are here to discuss financial literacy, financial health. So in terms of financial consumer protection, we have done some survey and we see, of course, some adaptation of the financial consumer protection framework in some countries, but that's still relatively slow and countries are catching up. Of course, some countries are leading probably the process, such as the UK, a number of Asian countries as well. Of course, the EU now is also catching up with a number of regulations that are put in place and will be implemented soon, but the process is still slow. In terms of financial literacy, what we see is that authorities, and I'm here speaking about public authorities only, there is some effort around alerting consumers on the risk and benefit of financial literacy, but this is more like information that is being provided to consumers, and it's a bit of a reactive approach, so something is happening. The crypto market is booming. Oh, suddenly authorities realize that they may need to issue a warning or may need to provide some information. So it's also always in this reacting phase. Some public authorities now are trying to train their population, especially vulnerable segments, but again, the initiatives are still limited, although progressing in a number of countries. And then there is some attempt to try to assess the impact of digital financial services on consumers, but again, here we do not get a lot of data from public authorities. At the G20 level, since actually the Chinese presidency of the G20 in 2016, there's been really a focus on the financial inclusion side of the agenda on digitalization. In 2016, the leaders endorsed a high-level principle for digital financial inclusion. So, of course, these principles are going beyond only financial literacy. They are addressing the supply side issue, data privacy, but they are also, of course, speaking about financial literacy and awareness, and I was happy to contribute to that work. Following on that first set of principles, Germany also focused on digitalization. Actually, the OECD produced a report for Germany that year on financial education and consumer protection in the digital age. Argentina also focused, but in a more practical way, on digitalization, trying to see how the principle endorsed in 2016 could be implemented in countries. And so they look at the different aspects of the principle endorsed in 2016 and produce a set of guidance. And at the OECD, we produced 2 guidance for that presidency, and I will discuss a little bit more the content of those. One on digitalization and financial literacy, and the other one on digitalization and consumer protection. And this year, during the Japanese presidency, the focus for the financial inclusion agenda has been aging. But that doesn't mean that we didn't look at innovation, actually pretty much the contrary, because innovation brings some challenges in terms of the aging society, in terms of competency perhaps of more senior people. But at the same time, it also brings new opportunities to provide access to senior people that are living in remote areas to financial product, and also, of course, all the innovation could also allow senior people to get easier access to finance. So actually we produced for the Japanese presidency a set of policy priorities that are looking into that. So looking into pure supply side aspect, innovation, and also what can be done on the financial literacy and consumer protection aspect in order to support aging society. But now I'd just like to spend a few minutes on the two guidance that we produced last year, which were focusing on financial consumer protection and financial literacy in the digital age. So what we did, so you can see the two sets of guidance, and they are available on our website. On the consumer protection side, what we wanted to focus is on how can consumer protection framework adapt to digitalization without creating too much burden. So the idea is to spur innovation, but still manage to protect consumers. And here we are really focusing on disclosure that is smart, that is to say that new type of disclosure requirement that use also data and evidence to make sure they have a positive impact on consumers, disclosure requirement that are adapted to the new types of delivery, but also alternative approach to disclosure, such as smart default, but also considering the regulation in Europe, privacy by default, as a very important complementary approach to disclosure, because we do realize that disclosure only is not sufficient. At the same time, the policy guidance on digitalization focus a lot on the development of core competency on financial literacy, and I'll come back on this. Just a few more words on the guidance note on financial consumer protection. We look at several aspects from an oversight point of view. The first one is ensure technological neutrality, or actually regulation by activity. So meaning that whatever the institution is, if it provides one type of services, it should be regulated in the same way. The second is what I said. We want to make sure that innovation is happening, so proportionality is very important. And of course, remain flexible in terms of the regulation, since development happening very fast. Now I really want to focus on the guidance on financial literacy. What we provide through this guidance is a checklist for policymakers, for the industry, for NGOs, and we actually have a kind of, I would say, 5 set of recommendations. The first one is the need to develop a kind of diagnosis of the impact of digitalization for consumers and micro and small entrepreneurs. What we realized when we were developing that guidance is that there is very little data on the implication for consumers, and without data, it's first difficult to raise awareness on potential impact. Second, it's very difficult to design policies that are meaningful and can have a positive impact on consumers. So very important to get that. The second recommendation is coordination between public authorities and the private sector. Clearly, the innovation is coming from the private sector. So public authority cannot do things on their own. They really need to partner with private institutions in order to make sure that they can not only understand what digitalization means for consumers, but also put in place policies that can support consumers, but also, as I said, support innovation. Third is about developing of core competency. I'll come back on this. And fourth and fifth is about developing effective delivery mechanisms in order to develop those competencies, of course using digitalization, but also using more traditional tools for some particular audience. Last but not least, the importance of evaluation. Again, when we were developing this guidance, we looked at programs that were trying to support consumers when it comes to digitalization of the financial sector, and we saw little evaluation of their impact. So at the OECD, we really are very strong on the importance of evaluating initiatives in order to make sure they matter for consumers. Very quickly on core competencies, we do think that the digitalization of the financial sector imply that we should focus on 4 key areas for consumers, no matter the age. The first one is build, I would say, their educated trust in digital financial services. By this, I don't mean blind trust, but really informed trust on what are the benefits, what are the risks. Empower consumers with not only big data, but all data. That's the reality. Millennium, for example, they trust the system very much. They put all kinds of personal data online. what does it mean for them? What does it mean for their access to finance? Thirdly, access to credit. This is what is creating slowly but surely an issue. Much easier access to short-term credit is creating some issues, especially for young population. So important, again, the message is not credit is bad. Credit is very, very useful, and we will all in our life need that for buying a car, house. But use of short-term credit to buy goods that are not necessarily necessary can create issues, especially for very young generation. And we see level of over-indebtedness of very young population rising quite rapidly in some countries. Last but not least, of course, be aware of digital crimes, the risk of hacking, and how to protect yourself against that. What's next? Very quickly, we are in the process of really analyzing how digital channels can support financial education. For me, it is very important, that part, although unfortunately there is little evaluation of the impact of those digital channels for financial education, but very important for, I would say, 3 reasons. Apart from the fact that it's appealing, cost-efficient, convenient, it's because we can address some consumer biases. And by this, I mean you can help people making a budget with an app that is smartly done, that can really support consumers, household doing that. You can set default option that will remind people to save, so that, like, for example, my run keeper will remind me in the morning that, okay, I haven't run for 3 days and I should go back. Same way, you can have a reminder built into the system to remind consumers that this is a time of the month where they should think about saving, for example. So there are plenty of ways that can be really adapted and customized to consumers' need, profile, income, risk appetite, that can really support them in their decision-making process. Another element is that they can learn through digitalization. And here, especially for young people, gamification can really be of great help in developing their habits for the future. We also worked a lot this year actually on the use of data and personal data. Here I won't be long. I just want to flag that there is a kind of a privacy paradox. Consumers, and this is the research that is shown in the US, consumers don't really trust institution, fintech, big tech to use their data properly. At the same time, they're saying, if I don't trust an institution, I won't use their services, and yet they do go online, they do buy. So there is a paradox here between what people are reporting, their lack of trust, and still their use of those online markets and products. So the issue here is to really try again to build competencies, to build awareness, and try to avoid these behavioral biases, which means that people, even if they don't trust, they will go for it. Just a last slide, 1 minute. As I said at the beginning at the OECD, we've started working on digitalization at large for a very long time, and in particular on finance, we are developing a large stream of work. I just want to flag on this last slide that since last year, we've set up a center on blockchain. We have a large policy forum every year since last year. Our next policy forum will be on 12 and 13 of September. Of course, we'll cover financial literacy, inclusion, remittances, and financial aspect more generally. And with that, I'd like to thank you all for your attention.
Thank you so much. Thank you so much. Thank you. Thank you very much, FloreAnne. Thank you for this general vision overview of the digitalization and financial health. I'm glad to know, FloreAnne, I'm not the only one who can't pronounce digitalization properly, although you've said it so many times that you pronounce it really well. Compared to me, I've always had problems with this word. What's in Spanish, we say digitalización, which is even more difficult. But there you go. Thank you so much. That was a very interesting overview. There's a lot of things going on at the OECD. But as we're going with 15 minutes delay, we're going to jump into our next panel, our first panel of this summit. Que por cierto voy a cambiar.
And now I'm going to switch to Spanish, if that is okay with you, and if not, I'm going to do it anyway because I'm in charge of the microphone. So I'll give time to the translators to change language, and I would like to introduce the first panel of the EduFin Summit 2019. This is a study of the OECD in Canada showed that most of the people that were surveyed said that choosing appropriate investment is more stressful than going to the dentist. What do you think about that? In fact, José Manuel González Páramo this morning, he said that money is the most stressful factor for people in general. And data such as this shows the importance of educating population in financial aspects. But I ask myself, and I'm sure you do too, how can we achieve this in the digital era without leaving anyone aside, especially those who are older and who are not digital natives? And FloreAnne mentioned it in her presentation. That is one of the risks, in fact. In order to answer this and many other questions, we have prepared the next panel, which is a great panel. As a moderator, we have David Tuesta, who was finance minister in Peru, and he has had several management positions in the public sector, finance sector, and in the International Development Bank. So, David, please welcome. Take a seat. Thank you for coming. And I'm going to introduce the panel members. The chairman of Arellano Consultoría para Crecer, Rolando Arellano, please take a seat. We also have Verónica López Sabater. She is the managing director of Fundación Analistas Financieros Internacionales España. And finally, and José Manuel has already mentioned it, from the Bank of Spain, we have Fernando Tejada, the director of Market Behavior and Claims Department in the Bank of Spain. And John Taylor, unfortunately, was not able to come due to force majeure. So instead of 4, we have 3 panel members. So you'll each have more time, and that's wonderful. David, I give you the floor. Thank you. Thank you very much, Elena. Welcome and good morning to everyone. I would like to start by thanking BBVA for having invited me to be here and for participating in this wonderful panel with great guests who are fantastic experts on the topic. This summit is becoming, in fact, one of the most important events in the international agenda. I participated in the one in Mexico. It's the second time I come to one of these events, and it's a great honor to be here. The topic of the talk would focus on financial education for all, but it will focus more on how to avoid digital exclusion, if we could say that. And as FloreAnne mentioned before, it's true that digital transformation has brought with it many changes, intensive changes over the last few years that has transformed several sectors, including the banks. And it has brought with it a huge amount of benefits as well, advantages, providing customers with more convenient products. It has transformed the market structure, generated more competition, new players. In financial inclusion, FloreAnne also mentioned that we have managed to overcome certain barriers that were obstacles, such as, for instance, being far from a bank branch, or has improved timing and access to certain financial products. In financial education, increasingly more, we have new services, and we have to see how we can, there's things that can help us, remind us to save, etc. So there are many risks, and I would like to mention certain topics that have to do with exclusion that FloreAnne also mentioned, that have to do with a high probability that certain groups that are already more vulnerable will be even more excluded. Let's think, for instance, of rural areas in many of these geographies. Maybe Sometimes they don't have the basic infrastructure. They do not have access to Wi-Fi. For instance, they can't connect. They can't interact with the financial service. Or let's think about the elderly who are now trying to adapt to the use of new technologies, but the technologies go really fast and can start to be lagging behind. And then there are also other studies that have shown how gaps in certain segments can increase, such as gender gaps. With the presence of this new digitization, if it doesn't go hand in hand with public policies. And there is a digital exclusion that is even more useful, and that has to do with risks. When you interact with the financial sector, the use of your data, the issue of not knowing exactly what products are being offered, or that some financial products may incentivate or may lead to greater indebtedness, and that may lead to a process of self-exclusion. All these facts, all these elements will be discussed in this roundtable. We are going to try and talk about them and to talk about the experiences that the experts have encountered through their work and through their experience with the financial sectors in their countries. I think that can really help to give us a greater knowledge about this. And if you allow me, I'm going to start with a session with Fernando Tejada. Fernando Tejada is the head of Department of Market Conduct and Claims in the Bank of Spain, and he was the head of financial education experience at the CNMV, the Spanish SEC. So, Fernando, tell us how you introduce these topics. Spain has had huge transformation in the digital world regarding the financial issues, with new players, with changes of legislation in Spain and Europe. And could we talk about exclusion? What are the risks, or what challenges can you see? Well, thank you very much, David. Thank you, and good morning to all of you. I would like to say that the Spanish financial education plan is not just the plan of the bank and of the SEC, but also of a whole set of collaborators. Many of them are here, including the industry of BBVA, and other financial organizations are represented here. And in fact, we are trying to analyze from our perspective as supervisors, we can analyze the impact that the provision of these financial and payment services have through the digitization. The use of the internet in order to provide financial services has grown increasingly. According to Eurostat, in Spain, 15% of citizens use the internet, understanding as such having used it at least once over the last 3 months. That was 15% in 2016, and that has gone up to 49% in 2018. So these are figures that are very close to the EU figures. We're just slightly below the average. So it's growing a lot, but there is not a massive implementation of the use of the digital channels for the provision of financial services. The FUNCAS metrics, I think, provides a lot of information on that and tells us that less than half of the Spanish banking customers would use purely digital channels. Only 4 out of every 10 customers would be willing to totally switch to online banking or to digital banking. When you ask those customers if they have to change financial institution, to what type of bank institution would you go to, 71% said they would go to traditional banks with a physical branch, physical presence. Only 24% would go to digital banks, to totally digitized banks. Only 3% would be willing to move to fintech, and just 2% would choose other channels through services providers or technological providers. So clearly, digitization is here to stay, but this is a slow process that will take a while to develop. The advantages of digitization are obvious, and these will help the statistics on the use of digital channels to continue growing in the future. We've spoken about the advantages. You can customize products and services. We also spoke about the immediacy, comfort, and also the costs. And in terms of costs, there's always a question mark there, because we'll have to see whether digitization really entails cost reduction, or whether that cost reduction can really be transferred then to the final consumers. I'm more concerned about the risks, and risks that have to do with security, with fraud, false IDs. And this is something that we're starting to see in our complaints department. We are worried about that, also about the immediacy. I mean, it was mentioned before as an advantage, but it also has a disadvantage. Immediacy leads, in many cases, that you can revert back to certain things, and sometimes you will not be able to resist certain processes, even though there is legislation that tells us that we can always change our mind. And the products, and this has already been mentioned before, are increasingly more complex, and complexity entails opacity, obviously. And there's also, we are concerned because banking operations on devices and or user-friendly applications, apps, can lead to certain effects such as an overconfidence by youngsters that can concern us, because maybe they are more worried about the app than about what's inside the app, or about the real content of the contract that you are signing, or the conditions that you are subscribing to.
De riesgos, pues tiene una incidencia.
And obviously this has an impact, particularly on some groups. We have mentioned the biggest ones, the largest ones. I always take into account people that have different capabilities or disabilities, people that are limited to some extent. Obviously, the difficulty to access banking services through digital media might entail a problem, an exclusion problem. To be more specific, in terms of regulation in Spain, let's say that as for payments, we have an entire new world for new operators, for new ways to provide financial services. We are no different than other countries in this regard, because our regulation for payments comes from a European directive, and it entails people that are involved in the digital world, payment initiators, payment aggregators, and it also entails the possibility of having immediate payment systems that allow access of new operators into the market. We have a new bill of draft that is about a sandbox that we are collaborating on with all supervisory authorities, with everyone in the industry, and of course the government, which is the one that is going to promote this. And there's some challenges ahead of us regarding fast credit, for instance. The Spanish legislation, as far as I understand, is not clear enough. It doesn't guarantee enough of a playing field, of leveled playing field. And there's also some regulatory challenges ahead of us that we need to address. I'd just like to wrap up saying that the three main problems, the three main drivers, so to speak, that we really need to address in the future are going to be finding the right regulation. First of all, regulation is to agree with the services. And in this regard, the proportionality criteria are important, but also we need to take into account the balance, the leveled playing field, as I was saying before. This is a trade-off. In the sandbox project, we'll have to regulate this. The second challenge would be to achieve transparency, as I was saying before, in costs particularly, meaning that commissions that are charged for the provision of banking services need to agree with the real costs. And if the real costs go down, those commissions should also be reduced in a way that there's a translation of the benefit that digitalization implies from the provider to the final customer. In this regard of protecting the end user, the end customer, it is interesting for us to make sure that the information for the customer is safe in the new tools, in the new products. And particularly regarding pre-contractual information, the legislation for the protection of consumer says that it's basic to inform the customer of their rights in terms of their personal information, and sometimes this is not as easy to accomplish. And finally, there's another set of challenges that we need to predict. As part of the Bank of Spain, of course, we need to be cautious. We are not concerned about the emergence of new players or about the disruption of the traditional value chain in the commercialization product. The commercialization chain of banking products is not a concern, but it's something that we need to take into account. We are responsible for its supervision as a financial institution. We need to watch this. We are concerned about the challenges regarding legal risks and money laundering and terrorism funding. Digitalization entails all of these aspects. I'm no expert, but we've all heard about all of these problems. So this is something that we really should take into account. We are also concerned about data protection. We are very coordinated with the Spanish Agency for Data Protection. And in the end, this is just all to say that this context entails some risks detrimental for the consumers and also some risk for financial exclusion. And we need to address this through financial education and through digital education, which obviously have to go together. Thank you very much, Fernando. That was very clear. Now I'd like to give the floor to Veronica Lopez. She's the director of the AFI Foundation, and she has wide experience in different countries in terms of exclusion of financial education. She also wrote a book about microfinances or ICTs, about innovative ideas for Latin America. I think the book is quite interesting because it focuses on these topics particularly. Veronica, let's address this topic from a different perspective now. Let's talk about one of the most crosswise aspects in terms of digitalization, payments. The world of payments has been making progress. It's one of the first vectors that start to be developed. Digitalization of payments is sort of the first step to incorporate other types of products, other type of innovation. Based on your experience, what do you think of the evolution of payments, both for emerging countries, for developed countries, and what are the risks from the point of view of financial digital exclusion? Thank you, David. Good morning, everyone. It is a true pleasure to be here with you this morning. As David was saying, I think that talking about payments really does make sense when we are addressing the challenge of potential financial exclusion due to the digital transformation era that we are undergoing in all settings of our lives. Particularly, one of them has to do with the relationship that we have with financial services, with financial products and financial agents that provide the services. Also, as David was mentioning before, after many, many years in emerging countries and developing countries, authorities have been testing out what is the most reasonable way to facilitate inclusion, financial inclusion of most of the population that are currently excluded financially in countries such as Latin American countries that I know more on a first-hand basis, and the ones that I'm actually able to talk about. It's been tested since the 80s, the 90s, with the financial services that are linked to the provision of credit for entrepreneurs. For many, many decades, it's been tested, it's made progress, and it has proven that it facilitates access to financial inclusion. Then we focus a little bit more on savings. Not everyone is an entrepreneur, but there's more people that have a better capacity to save than to start a business. So public agendas, public policy agendas in many countries in Latin America focused their efforts on the facilitation of access through savings, basic accounts, and more simple mechanisms to buy that financial product, which is a savings account, a basic savings account. Finally, nowadays, due to that experience and those evaluations of performance that all these initiatives have conducted, we have established that there's a financial service that everyone uses every day several times, regardless of where we live, what our social economic status is, what our education level is, and that is payments. We all make several payments throughout a day, regardless of those characteristics that I just mentioned. But the way in which we make those payments is different depending on the access that we have to financial services, depending on the trust that we have on providers, and also on whether it's an alternative way to pay instead of cash, if it's more convenient, if it's easier for us to make that leap, to take that leap into digital electronic payments in a more convinced way. And that's where there's potential risks for exclusion of the population. Financial education in this regard is very, very important. As we have said before, as FloreAnne has pointed out before, very precisely, we are undergoing a time in which the status quo of the provision of financial services is changing, the industry is changing, we're becoming more digitalized. There's new players that we didn't know before, or players that we knew but that were in other industries, and they're now providing services that for us, maybe not for everyone present here, because we really want to experiment with them, but for the general population, these services are just like the ones that a financial institution might be offering, a more traditional financial institution. These financial institutions are almost exclusively assisting the population. What I mean by this is that many of the alternatives, many of the practices that agents might conduct nowadays to minimize financial exclusion that digital transformation entails is precisely the institutions that so far are assisting all of the customers, almost exclusively. They need to help them understand and explain the implications of these changes, of these challenges, of these benefits and risks that digital transformation entails. I'm going to give you some practical examples. The use of cash, for instance. Initially, that is incompatible with a digital economy. There's still spaces in which there is some way that they can be compatible, but it is a universal payment method. It is the most universal payment method nowadays. However, it doesn't leverage all the opportunities of the digital economy. In Latin American countries, or even in Spain, cash is the preferred payment method. There's still plenty of areas in which the only accepted payment method is cash. To groups or people that maybe are more informed, more educated, or more aware of the advantages of digitalization, we try to switch to electronic payments, digital payments, because we have the access, we have the means, and we are not afraid of using these payment methods, or maybe we're more used to doing this. But there's plenty of people that even if they have access, because in Spain access is pretty much universal, in other regions it's still a challenge that we need to address, such as in Latin America. Access might be hindering financial inclusion and digital inclusion. But in countries like Spain, where there's no problem with access, the problem has to do with the usage. I think it would be necessary to launch some initiatives, not just educate the population, but also show the right signs, the proof that this is the way that we have to go. This is the path we have to go down. Financial institutions are prepared for this, and they are completely convinced that they will be the partners that will help us through that transition, without taking for granted that we all have the same level of knowledge, that we all have the same concerns, or that we all have the same way to get out of our comfort zones that we are in right now. In this intervention and in the next interventions that I will have, I'm going to relate this to the usage and the dependence that we have to cash. Even though we have plenty of alternatives available that are free and that are at our disposal, we still prefer cash. Excellent, Veronica. Thank you very much. Now I'd like to give the floor to Rolando Arellano. He's the president of one of the consulting firms. The most relevant consulting firms in Latin America is based on Lima. And Rolando is an expert on the behavior of customers and the population overall, and the relationship with different systems, particularly the financial system. Because he's an expert in these topics, I'd like to ask you, Rolando, the following question. What do you think about the interaction of people with new digital products, particularly in Latin America, and particularly regarding financial products? How aware are they? How much do they know about them? What do you think could be the role of financial education in all this? Thank you, David. Thank you, everyone. Well, Latin America is sort of in the middle of financial education, of access to financial systems, also in terms of income level compared to Africa and Europe. We're sort of in the middle. And there's a number of factors that have to do with digitalization. I think they haven't really been analyzed. And the most basic aspects are my true concern. From what we see in Latin America, many people haven't really understood that digitalization is just a tool. It doesn't change the process. It just makes the process faster. And this could have a negative impact on inclusion, because it might accelerate a process that oftentimes is not done properly. A natural decision-making process is to know something, want to do something about it, and then take action. You need to know what a credit is, what a loan is, what it's used for, what are the consequences. Then you decide that you want a loan because you already analyzed and you have the information, and finally you take out that loan. But what happens sometimes, even before digitalization, is that oftentimes the process works the other way around. The financial system focuses directly on wanting something without knowing something. So in advertising, for instance, buy your dreams, travel today, go out for lunch with your children. It's all about wishes. You want something without even knowing what things are. Even worse, sometimes the system tells you you have a pre-approved loan. Do you want it now? So directly, they take action without going through the entire process, without knowing if the person even wants that. And the problem that is becoming more and more of a concern in Latin America is that people don't really know what they're doing. They receive the loan, they don't know how to pay back, they don't actually know that they had to pay more than what they had received, and so it entails a number of complications. So instead of including people in this process of taking out loans, we exclude them because they end up being angry at the system, not just them, but their entire families and everyone around them. And in the end, it just becomes a vicious cycle because they lose, the system loses, the entire economy loses. The biggest concern is that when we're talking about digitalization, particularly in the banking system, in the financial system overall, we talk about digital components as something that will accelerate processes. It has to do with the logistics. And also it has to do with lowering expenses. But we don't really focus that much, except on this type of events, we don't really focus on the first part of financial education. What digitalization might do is accelerate these bad processes, particularly in the case of people that are more exposed, less informed people. So maybe what we should take into account and what we should talk about in this type of event is that the first most important step in digitalization should be financial education. We shouldn't move on to the second stage, to the usage of digitalization, to the stage of delivery without educating people properly first, because otherwise the entire system loses. The financial system loses, the people lose, the economy loses. So the ideal situation would be to have sort of a driving license. You should not be able to access and take out that loan if you haven't proved before that you can handle that. So financial education should be a central key component. Access to credit should not be granted unless you have financial education. I like to finish my intervention with an example, because this situation that happens in the financial industry also happens in the real world. If you've been traveling to Bogota, to Lima, to Mexico City, you'll see that traffic is completely chaotic. We don't really know how to drive. It is very hard to drive in these cities. What's the reason for that? Latin America has grown significantly in the last 15 years, in this new century. And there's plenty of people that have access to the consumption market. Pretty much 50% of the population moved from poverty to the consumption market, and there's plenty of people that bought cars, and they've started to drive them. But we don't know how to drive cars. We drive very bad. We have the tool, we have the instrument, but we don't know how to manage it. So that's why this entire traffic system is so chaotic. Hopefully this won't be your experience, but if you ever visit one of these cities, you'll see that this is the situation. And I think that's the same situation in the financial system. We should try to avoid that, because if we accelerate access to credit, which is what we're doing, without educating first, the consequences are going to be terrible. And there will be a non-inclusive digitalization. It will lead us to exclusion. Thank you. Thank you, Rolando. Maybe now I'd like to focus on more specific topics. And again, let's go back to Fernando. I'd like you to tell us about the challenges that we are going to face when trying to incorporate these ideas on financial education, particularly in terms of behavior supervision. What do you think are the steps? What is the Bank of Spain doing about it? Well, that's an excellent question, actually. As the central bank, we have a legal requirement to watch and take care of financial stability. That means that we need to intervene as necessary. Traditionally, this has been done based on offers, based on the providers of financial services. We are the supervisors. We've tried to intervene, supervise, regulate the functioning of that market, the functioning of financial institutions, and the products that they offer. But we can also act based on demand. And obviously, there's an entire world of possibilities here. And we reach the conclusion that we need to act based on both sides of the market. Acting based on demand means that we need to empower customers and potential customers of financial institutions so they are able to understand the offer of financial products, so they have a better knowledge. We have implemented a financial education plan with the National Securities Market Commission, but we also act within our own scope, and that has to do with making financial education tools available, financial information tools available that can be directly applied to customers' day-to-day operations, particularly through our banking customer platform. We have information, we have alerts, we have simulator calculators, so a number of practical tools that allow citizens to gain better knowledge about the financial products and banking products. But the engagement of a central bank with financial education goes well beyond that. Obviously, for us, financial education is also important regarding organizing the financial life of families, of households, of micro companies. We need to make people financially responsible so they can organize their income better, so they can prioritize expenses, take into account that in some cases it might be necessary to reserve some of the resources, to allocate them in a different way for some situations such as retirement. So engagement doesn't really needs to take into account these two aspects: the supervision of behavior and also the aspect that has to do with the welfare of citizens, which is another component that contributes to financial stability, really. But on top of that, our approach to financial education is also based on financial institutions themselves, the financial institutions that we supervise. We promote financial education programs. BBVA is an excellent example of that. BBVA has had plenty of initiatives and plenty of programs, and they're very involved in financial education. But a great deal of financial institutions in Spain have financial education projects that will make up our strategy, our national strategy for financial inclusion. Well beyond the financial education plans and the financial education initiatives that financial institutions might have separately, I think that one of the things that we are really trying to promote right now is the change of behavior. The fact that financial institutions within their culture need to have the idea of consumer protection embedded and rooted within the organization. That's the idea. That sort of idea that our grandparents have. If you have a customer, you have a treasure. That sort of mindset. That's what we achieve when we treat customers properly. And it is the responsibility of the financial institutions to provide financial education when they interact with customers. There's no doubt that pre-contractual information is financial information. Advertising that is published in whatever media also entails financial information. So we believe that it has to be embedded in the culture of financial institutions, included in processes, for example, launching products, advertising, and of course the commercialization and post-commercialization of products. That's our focus right now. We need to make sure that financial education is rooted in the cultures around the commercialization of financial products. Thank you very much, Fernando. Veronica, In your previous intervention, you mentioned exclusion, self-exclusion. I don't know if you could go deeper into detail about that in terms of the risks for education and financial inclusion. Yes, what I mean by self-exclusion is the big difference that we can appreciate according to public statistics and market surveys that are available. The difference between access and usage. Oftentimes, in the case of Spain, for instance, we realize that pretty much 100% of the population has access to alternative payment methods other than cash. Everyone has a debit card or a bank account. But when we take into account the usage to do our daily payments, for example, not recurrent payments, Spain actually is one of the main European countries in terms of trusting the automation of payments. We pay bills, we pay very important bills in an automated way, for example, rent, mortgage. But when we go out in the street, and that's something that you can appreciate from now on, when you go out in the street, our society is sort of paranoid, sort of bipolar. We directly decide to use cash to do our daily payments.
Many times I do that in order to avoid problems, or in order to avoid moments when I won't be able to consume, because the only way that has been provided or universally accepted is a payment method that is not digital. Let's remember that the world of payment methods has two sides to it. In terms of the demand, we have one who pays and one who receives the money. And we can be very well equipped and can have a decision to, we can personally decide to use alternative payment methods, but may not be able to exercise that desire because the other side has no willingness or equipment to do so, to accept that. And this is a very specific self-exclusion method that can lead, well, that can come from an imbalance between the offer, huge supply that we can see with different services, different providers, and I'm focusing myself only on payments, on payment methods. There are many, many different options, but no one has actually explained to us the differences, etc., amongst them. Another pillar that could foster self-exclusion. By self-exclusion, it means that I decide not to participate of that service. So another reason is because of the huge risks that we imagine exist within the digital world due to data privacy, data protection, who's got my data, what they use it for, and the difficulty that we have, the problems that we encounter when we try to understand or to be motivated enough to read the terms and conditions of the services that we acquire. I mean, through our research in Latin America and in Spain, we know that there is a minority of people who actually read the terms and conditions of the contracts before they hire a new service. And so, when in case of doubt, many times we decide not to use them. Also, in terms of financial services, there is an alternative by default, which is universal and to which no one complains about. Why not use that one and use other digital payments? That means that I have to be able to familiarize myself with them, to know where I can use them, to protect myself from those risks, etc. Why use those? That's why many groups decide not to take the leap. They decide it's not worthwhile taking that leap, also because no one is helping me to do it. No one sat down with me to explain to me how to download an app, how to link my cards, and how to make a first transaction accompanied by someone. This has not been done in Spain, and I think many opportunities are being missed because we do not accompany that process by the financial institutions. The financial institutions have provided those services mostly exclusively, given the threat or the arrival of newcomers that offer services that are very similar to the services provided by the traditional players. So this may also be fostering self-exclusion. And then if we go up in terms of responsibilities, then I think that there is another field of responsibility, which is the public authorities. I think the public authorities need to provide the messages and the appropriate incentives so that as a society we can go forward without leaving anyone behind towards this digitization. So this is something that could help us. I think if we launch clear messages and if you launch consistent messages regarding alternatives that exist in the market and the advantages of those new channels for payment methods, would lead to great advantages and would reduce the risk of self-exclusion. A self-exclusion that goes beyond just lack of access. Fantastic, Veronica. Thank you very much. Rolando, at the end of your presentation, well, you talked about this analogy. You talked about road traffic as an analogy, right? And the road traffic that we have in some of our cities. And you showed us the way for financial education in the digital era. Based on your experience, could you try to show us or to tell us how that financial education should be implemented based on the potential financial customers we have and on your knowledge of those customers? Well, I would like to mention two things regarding what Veronica was saying about self-exclusion. One of the things that we see, and that I'm sure you see too, is people who self-exclude themselves just because they're fearful of the system, because they've experienced others that have had problems with that. And we see that in the case of Latin America, there is a large percentage of digital population who do not want to enter the digital financial services. They are modern enough to move into the digital world, but they do not want to do digital banking. And also, we find that about 20% of the banking customers, and this is in answer to Fernando, are not digital. So if we look at just digitization, if we went fully digital, we would lose that 20% of people. What we find is that it's very common that institutions underestimate their clients. But in the case of banking and digitization, what we find is that financial institutions overestimate people's knowledge. For you in Europe is very normal to say, as they were saying right at the beginning of the summit, that people, for instance, don't know what compound interest is. Well, in Latin America, many people don't even know what's interest rate. Let's not talk about compound interest. They don't know what an interest rate means. If they say they're charging you 10%, so this bank charges me 15%, and the person who lends me the loan only charges me 10%, but they don't take into account that is a monthly 10%, whereas the bank is 15% annually. So they even have that lack of knowledge. Or, for instance, when investigating retirement services, some things that look totally irrational, but people don't know what retiring entails. They say, my grandparents worked till they were very, very old, or my parents retired when they died. They don't understand what it means to retire and continue having revenues, or they don't know the issue of insurance. I mean, they pay, and if something happens to me, I'll lose my money. Well, they don't even have those basic knowledge which is necessary to take into account. We need to know what they're aware and not aware of in order to be able to educate them, and in order not to feed that vicious circle of unhappiness. And we also talk about consumer loans, in principle. The essence of credit is to generate productivity, though, that if you receive credit, you're going to have to pay more in the future, right? So that entails that in the future you always should be in a better position than now, because if you're not in a better position, then the payment of the loan is just going to limit your current balance. So the financial sector has the responsibility to generate productivity in the person they give the loan to. So not only do we need to talk and teach about credit, but also we need to teach about how to be productive. And I think that the financial sector as a whole, we have to help our customers be more productive. And we need to talk about other things that we have mentioned within the foundation. We have to help people improve their revenues, make budgets, basically manage their revenues in order to grow as a family, as a household, or as a company. Fantastic. Fernando, I think what would be interesting for you to share with the audience, as part of the Bank of Spain's education plan, how do you approach these challenges in terms of education? I think what Rolando said is very interesting. The fact that some minimum basic concepts are not understood, and we need to try and foster that knowledge. I think an example of this is the equivalent annual rate. It is true that trying to believe that people would understand the mathematical calculation behind maturities, whether they are executed before or after, that's very difficult for them. But we can teach them certain things. For instance, the regulator should try to have a measurement pattern. So obviously, I can't expect everyone to know to calculate an interest rate, but I can impose a standard measurement that will allow that person to compare 2 or 3 different types of loans. And I think that would be very interesting. And in this case, this is clearly how regulatory body can help citizens. So, for instance, many times if we have an appropriate metrics, we can explain to people what is cheaper, the 10% or the 15% that you mentioned before. And about the question that you asked me, digitization is a concern of our plan. In fact, the financial education plan and the guideline of 2019 that will be published on the 7th of October, is the first Monday of October, in fact, is devoted to digitization. Because as I said in the past, we believe that financial education and financial health have to go hand in hand. I don't know which one comes first, but I do think that they have to go hand in hand. We are going to make an effort this year, a special effort, to raise awareness about Yes to financial education, but hand in hand also with digital education. In more specific terms, we have carried out many awareness-raising initiatives for vulnerable groups. We have collaboration agreements with the main stakeholders in Spain in those fields, for instance, with people with disabilities or the elderly. We're also trying to raise awareness about the risks of contracting digital financial products, the importance of privacy, etc. And in terms of schools, we have a program on financial education that takes place with children that are aged between 15 and 16 years of age. And we put at the disposal of the teachers of those children certain training and education materials that are also digital materials so that the children get used to digital payments mainly. So this is what we are doing in the specific field of financial and digital education. Thank you very much, Fernando. Verónica, I know that you've been involved in a project in Spain that has done a pilot to see how specific set of population interacts and how they act without the use of cash. And that is very important because it allows us to approach the future. It allows us to think about the potential benefits that we sometimes see that from a public perspective. We think that that everything can be bankarized, that the use of cash can be decreased. And there's an experience in India which was very interesting, not just because of the positive results, because it brought to the light certain problems and obstacles. Yes, it is a pleasure, David, to share this. It was the first experience. It was called Cantabria Digital. If you Google that, you'll be able to find the information on the internet. It was a project, a pilot project, a social project in Spain, the first of its kind in Spain, that allow us to double click on those statistics that we mentioned before about why there's such a gap between access and use in Spain, or what happens in areas outside large capitals where we are not exposed to that huge where there's a huge dependency so we went to Suances, a huge dependency in cash. So we went to Suances in the north of Spain, hand in hand with the government of Cantabria, the regional government of Cantabria, and a company. And we focused on trying to understand what motivates people who paid, but also people who charge, such as stores, small companies, etc. Why do they use so much cash when access to banking is not a problem in Spain? In any case, in order to make sure that no one had access problems, we put at the disposal means, cards, TPVs, payment terminals in those stores that did not have it. So at the same level of access, we encouraged the population, about 8,000 people, to use and accept alternative payment methods. It's a touristic area, so we did experiment off-season where there were no tourists around, and we observed that the love for cash was such that we couldn't get people to use, to join us just in this attempt to pay only with card or with a mobile phone. We told them that all the stores would accept this alternative payment method. Given that the population did not go for it, obviously as part of the project, we had taking into consideration the different assessment tools. So we did working groups, assessment sessions, we had financial education groups, we did specific competitions and contests. And the conclusions that we drew from all this experiment, I mean, it took us half a year to prepare this project because we had a huge diagnosis about the access and use of payment methods, and the cashless period, the actual cashless period, lasted for 2 months. And during the whole project, we drew some lessons that are useful to bear in mind, and that we encourage other initiatives to take those conclusions into consideration when they carry out their own projects. The first lesson learned was that digital transformation and the digital transformation process in any aspect of our lives is something that, if we want it to be taken on, accepted by the population in a frictionless way, seamless way, requires the involvement of the public sector, of the private sector, the tertiary sector, and of the people themselves. Citizens have to be encouraged, all have to be encouraged to participate. That means that we need to devote resources, because innovations are not taken on by osmosis or just because we are surrounded by innovation around us. We need tools, we need follow-up, and we need to accompany those people, to help them, and we need to have clear signs about what we have to do. And when I talk about accompanying people, I mean financial education. I don't use that term very much because I think that financial and digital education should be something that is cross-sectional in our lives. It not has to be the specific channel. It's not just a specific group that we have to educate financially about loans, about pensions, about what's digital. No, this should be holistic. It should be included in our daily lives, and it should be shared. And I think that some of us have a greater responsibility because of the duties that we have. So we have to continuously educate people on any aspect in our lives. So yes, it's important to educate the children in our schools that can understand very simply certain complex problems. That's one of the lessons learned. Then, regarding what people thought about digital transformation, how aware they were, especially in such a mundane issue such as paying for things, this is not something that people, they are not interested about. They worry about having money to pay, but how to pay? Well, it's more irrelevant to them in their daily lives as citizens or as store managers. And we know that that is not really the case. And that knowledge leap, because of all the consequences of how we pay, all the consequences that the payments entail, has to be embedded in any financial education or digital education plan that we have in any aspect. To encourage people to leave the comfort zone, to stop doing things the way they've always done them, something that I've insisted upon and that we've seen through the experiment is that it's necessary to give them clear signs. We need to continue understanding that the way in which we pay or how we carry out our transactions, our financial transactions, are closely related to the quality, sustainability, and to our well-being in general. So we go into more uncomfortable areas that have to do with also underground economy, etc., Those are things that would not be possible or would be more limited if the payment method, the universal payment method, was not cash, because it fosters many of these practices that are not desirable if we want to have a healthy and prosperous economy. And finally, related to this, as well as the involvement of public authorities and the clear signs, I think that the media are also very important in order to make sure that these education initiatives are holistic, that are cross-sectional, and that are present in our daily lives without becoming invasive. Finally, there's also the fact that currently there is still a lot of sentimental, ideological ideas and taboos regarding financial services, banking institutions, financial education, long-term savings for retirement. I think together we should try to make it as agnostic as possible so that the transfer of knowledge and of information is more simple. Well, it's a great initiative and lots of lessons drawn from that. And finally, Rolando. You said that financial ads, that all this advertising towards the population could generate and generates inappropriate behaviors when we think about financial education and financial health and education as a whole. What is the role of public authorities in that? Well, I did my PhD in marketing about 35 years ago in France, and so I've been trying to answer these questions for 35 years. Many people think that marketing actions are just to sell, but the real raison d'être is not to sell, is to get people to come back to buy again, to get people to be happy with what you give them in exchange so that they come back. If we only use marketing to generate an action which is not going to be positive for people, well, we are committing business suicide. It doesn't mean that it's bad to do it, to incentivize consumption, as long as at the same time we make sure that we do the work so that the consumption is appropriate. It's okay to stimulate certain behaviors because it could benefit people or it could improve people's satisfaction, as long as at the same time we provide them the information so that they can choose appropriately, so they can choose freely. Because what could happen if that is mismatched? And that is happening in other financial, in other commercial areas. Well, in the midterm, we could start having those adverts with those warnings, as we have high in salt or high in sugar. Well, we could have the same for this, so that either the financial institutions do it or the public authorities would have to put warning messages, or are going to start saying you can't incentivize without having given the appropriate information. So with that, what I'm trying to say is that financial exclusion is present. Financial education has been very good in Latin America. We have very small companies that have grown thanks to the financial products. We know that that can work well, but now, thanks to digitization, we have the opportunity to make that work even better. And digitization has been proven, for instance, in the field of education. We can improve exclusion we can improve inclusion through digitization. We can customize messages. We know that digitization reaches more people quicker. So digitization could continue working in this process of knowing, having, and acting in this process. So we could, the digitization can help as long as we respect that balance. Well, thank you very much, Rolando. I think we are lagging a bit behind schedule. I think our panel members have given great knowledge. Fernando, based on the Bank of Spain's perspective and the initiatives that they're carrying out to face digitization and how to provide the necessary resources to face those challenges. Veronica, based on her experience, talked about different different social aspects, such as this project in Cantabria that talks that says that financial education goes beyond what we normally think about it. And then Rolando spoke about the responsibilities of the public authorities and the financial institutions, how to provide the financial services, how to provide them appropriately and responsibly. And if there's nothing else to add, please, let's give our members a round of applause. Well, don't go yet. Well, the truth is that this roundtable has been great. I've taken many notes. There are many tweets about it. I was going to summarize, but our moderator did a great job of that. So continue tweeting. You know, the hashtag BBVA EduFin Summit. I think we have a moderator that has been great. I think you have to be invited again next year because you have been a great moderator. So let's give him a round of applause as well as a round of applause to the panel members. It has been very interesting, but the time for coffee has come. So you can have, there's a coffee break available if we go through this door, and we'll see you in half an hour at 12:15. Thank you very much.
...2019, particularly those of you who are joining us on streaming. My name is Elena. We're spending this session here at the BBVA headquarters. Let's continue with the next roundtable. It's quite funny because in the video that we played this morning before José Manuel González Páramo's intervention, we mentioned compound interest. And then I think Fernando Tejada mentioned it again. It's such a basic concept, and many of us don't really know what it means.
Because this next panel is going to be in English, so you have time to adjust, and the translators as well. I'm going to switch to English to introduce this next panel. And regarding the concept of compound interest, is interesting because in Australia, 67% of respondents indicated that they understood the concept of compound interest, yet when they're asked to solve a problem using the concept, only 28% of those 67% initials, they have a good level of understanding. This is what we've been saying the whole morning, actually, that we all need a much better grounding in financial education. But each country has its own specific strategies in this regard. In order to share some of these strategies, we have invited experts from China, from Mexico, and from the European Union. But first of all, as usual, we've indicated a super top-level moderator. She is, and bear with me because this is probably the longest title of any of the moderators or speakers today. Okay? Bear with me. She is responsible for advisory services for the Financial Institutions Group for LATAM and Europe and Central Asia at the IFC. She is the lovely Liliana Pozo. Welcome, Liliana. Let me introduce her guests. We have the chairman of the Chinese Museums of Finance, Mr. Wan Wei. Where are you? Here you are. Welcome. He's very funny because he says either one way or the wrong way.
Either way.
Either way. So one way, now we'll never forget you. We'll never forget him. Then we have with us the Director of Communications and Financial Literacy at the European Finance Federation. He is Mr. Raymond Franken. Raymond, welcome. And finally, we have also the lovely Silvia Singer. She's the Director of the Interactive Museums of Economics in Mexico. Welcome, Silvia.
Something happened.
And I tell you, and I advance you that Raymond has brought you a little surprise. It's going to make you work. So get ready, get your mobile phones out, because he's going to make you work a little bit. Okay? And also, there could be a winner. Are you okay, guys? Yeah? Take your time, yeah? Shall we play musical chairs?
Okay, and then let's play a little game.
Okay.
And just imagine that you are a kid in a classroom, and your teacher tells you, put your books away and get out your mobile phones. We're going to play a little quiz, and on the digital screen in our classroom, she puts on a Kahoot. And a Kahoot is a little quiz platform that many teachers, actually millions of teachers, use across the world. And we're going to use that over here as well. We're going to do 3 short questions to test your financial literacy. And what I would like you to do is to go to the Kahoot app or to the website kahoot.it and type in this code, 318304. And after you type in the code on this website, you will be asked to put your name, or you can put in a fake name as well if you don't want to be exposed for your lack of financial knowledge. But if you have a fake name, you can't win anything. So let's see who is joining over here. So 14 people so far, and we have by far more people in the room, I believe. (318-304). Elena, are you connected?
Nickname.
Nickname.
Oh, now I cannot lie, yeah?
Yes.
The low levels of financial literacy is a big problem in our society. Young people, especially nowadays.
So if Superwoman answers a question not correctly, we all know who it is. And there she is. She's on the screen as well.
Thank you. Thank you for sharing my secret.
37 players we have, so let's start. I'll press start over here, and that will bring us to the first question. Are you ready? This is a demo of the European Money Quiz that we play at the European Banking Federation. The first question tests your knowledge about interest and savings. Suppose you had 100 euros in a savings account and the interest rate was 2% per year. After 5 years, how much do you think you would have in the account had you left your money to grow? And you have 45 seconds to answer still. On your mobile phone, you press the color of the right answer, or the color of the answer that you think is right. Then you click the green. You will not be identified. Only the winners will be identified. So that's a good number of players actually, 50 answers so far. 10 more seconds, and also when everybody has answered, the right answer is automatically shown. There you go. So 40 people answered this question correctly, and we actually have 12 people in the room who did not know what the answer to this question was. Next question. So Alfonso was the first one with the right answer. The next question is about inflation. And again, you will have 1 minute to enter your answer. Imagine that the interest rate on your savings account is 1% per year, and inflation is 2%. After 1 year, how much would you be able to buy with the money in this account? More than today, less than today, exactly the same, or you don't know? I think 52 people are playing, 53. I'm going to hit skip so that we don't have to wait these final questions. 45 people had the correct answer. Inflation at 2%, 1% interest means you can buy less. And here is the, so that is somebody who typed in the code as his name. Whoever that is, you're number one. Final question is about risk management. This is a true or false question. Buying the stock of a single company usually provides a safer return than buying a stock mutual fund or an investment fund. Is that true or false? Still 3 people in the room who have to answer. One more. There we go. 47 people knew that this was incorrect, but 6 people in the room knew that it was not correct. So the winner is of this little money quiz. Who is the person with the name 318304? Maria, that's you. Maria, come over here. I don't know, do we have a little prize for Maria?
There's a prize for you. Come up. Congratulations.
Maria, congratulations.
Well, the prize is actually a kiss and a tap on the shoulder.
Yes. And a big round of applause for Maria de Merces from Brussels, from the Bruegel Institute.
You'll always be the first winner. Well done.
That's it. The questions that you just answered are known as the big 3 questions in financial literacy. These are the questions that, for instance, Professor Lusardi at the Global Financial Literacy Excellence Center in Washington uses to do her research on financial literacy. Is it improving, yes or no? And you'll be surprised to hear that barely anybody is able to answer all these questions correctly. Only in the category of 65 to 70-year-olds, more than half of the people is able to answer these correctly. And that shows that financial literacy is a big issue, not only in the United States, but also elsewhere in the world, and that we all have a lot of work to do. And that we'll discuss about here. Thank you.
Thank you.
It's good, sir. Good.
Thank you, Raymond. And I want to thank BBVA for the invitation to moderate this panel of pioneers in financial education. It's my pleasure to be able to talk about 3 of, I guess, the largest economies, if you put the EU together, China and Mexico. And so I think, from this money quiz, what we're trying to show and what the panelists are, focusing their programs on is the interactiveness of financial education and the different ways you can work in helping the population understand finance. So it's my pleasure to introduce, and I think this is a different perspective from what we saw earlier this morning. We heard from the OECD and how we're looking at it from a policy regulatory level and how this is trickling into financial inclusion strategies that governments are putting into place, and how financial inclusion is are being incorporated into these strategies, and financial education is part of that. And now we are looking at how this is being done in practice, how these individuals are working through their institutions to really work with the public to demonstrate what the experience is, what the challenges are, how do you measure success. Silvia is the pioneer in the sense that she was the first one to set up a finance museum. There's a whole controversy around should it be called Museum of Finance or Museum of Economy. Silvia is advocating for economy since it encompasses finance and is much broader. So Silvia, it's my pleasure to introduce you, and it would be great to hear from your perspective on how it all started. Finance museums or museums of the economy are growing. There's now an international federations of finance museums. There are 15 members. They're on their way to become an international organization. And so it's about how do you leverage the experience that was started in Mexico, I'm very proud to say as a Latin American, and how it's gone all the way to China. And how do you leverage the experience, taking into consideration different cultures, different attitudes towards talking freely about money. And so Silvia, I leave it up to you to tell us the story of what you're doing. The name of your institution is interesting. It's the Museo Interactivo de Economía, so the word interactive is an integral part of who you are. So please share with us what you're doing and your experience. Thank you, Silvia.
Yes, thank you very much, Liliana. It's a pleasure to be here. I really thank EduFin and obviously BBVA for the invitation and the possibility to talk to all of you. The first time the summit happened in Mexico, and some of you who were there probably had the opportunity to visit my institution, which obviously I'm very proud of. And so I'm not necessarily going to tell you all the story of the institution, but I'll tell you a couple of things that I believe are really relevant to what your question is and how to answer it. MIDE acquired this name because of the methodology we use to produce our exhibits and our programs, which is to always go and ask our potential audiences what their perception of things is, and what would be, we try to find out what would be the best way of communicating. So when we were about to choose the name of the museum, I didn't want to be called interactive because as a museum professional, and right now I've been a museum professional for more than 35 years, I think interactivity means many things and not necessarily playing with a machine. So I didn't want that name into the name of the museum. But finally, it seemed when we did our research outside that people would understand a little better what they were going to be invited to do if we had this word in the name. So, well, that's part of the story. But let me go a little back into it. The central bank, the Mexican central bank, had discussions about how to make society approach the concepts of economy and finance in a better way. So their function and what they were trying to build up, which was Mexican economic stability, could be better understood by the public, by the audience, by society. So they came up with this idea. It's a brilliant idea, and this is why we are the first ones, because there were some other museums that belonged to central banks. Most of them were numismatic collections, and the Wundersbank had a quite comprehensive exhibit hall with interactives, but it was just about the functions of the central bank, because we went looking around the world to get some experiences. Personally, I had, before MIDE, I had been the designer and the director of other science centers and natural history museums. And I did have the experience, but trying to design an economy museum was absolutely new to me. My background, my academic background is that I am a biologist and I have a PhD on ecology. And obviously, everybody at the central bank were going crazy when they knew that the project was assigned to a biologist. And I just said, well, I am a biologist. I am an expert in communication in the museum. And if you were the ones leading the project, probably nobody would understand, with all my respect. If I can understand, first of all, and then explain, probably people will understand. The fact is not that I did understand and explain, but that we use the methodology that we keep on using right now, which is, first of all, perform several front-end studies before starting designing. And we do this for the exhibits, for anything that happens in the museum, but also for our financial education programs. I'm going to spend just a couple of minutes talking about the power of a museum. Why a museum? Sometimes people ask me, are you really, really, really a museum, or you're just a facility that has financial education programs. We really want to know this. And we're really, really, really a museum. We have exhibit halls, we have temporary exhibits, we have educational programs, we have outreach, we have everything a museum must have. And we do it because museums are trusted places. Every 2-3 years, there's one research, remarkable one, done with the more strict methodology that shows that the credibility of museums goes above the credibility of written stuff, books and press, radio, and obviously television and other media of communication, even the web. So we need to, for us that's great, but it's also a commitment. You need to pay back this trust that people are giving you when they come into the museum. And I'll talk about this a little more ahead. The museum was thought in this way. We did all these front-end studies, and we found very interesting things. This was back in 2002, sorry. And what we found, for example, was that in Mexico, people would have a bad idea about money in general terms. Most of people would say that money was bad, that money was filthy, that money would corrupt people, and the most devastating answer, because the questions were made in many places of different socioeconomic profiles, and most of the people would say money is for the rich and not for us, or not for me. So it was obvious that we should not promote our place as the money museum, and it was obvious that we should not start by money. We should start by something that would be closer to the audience if we wanted to communicate in an efficient way to them. After many reflections and workshops, we decided that we were going to have 2 thread lines that would go across all the topics we presented in the museum, regardless of what they were. The first thread line, was going to be decision-making. So economy is the science of decision-making, and in financial education, what you want is that people make better decisions that will benefit their daily life and their well-being. So the museum is really about decision-making. There's nothing in the museum that does not include the exercise of making a decision. And the other thing that we decided as a thread line was that everything we would do would have examples related to people's daily life, because that's very simple. That's why we are and we were going to be able to communicate to people. We want people to identify with the content of our programs. And this that I am saying has worked pretty well for the museum that has been open now for 13 years. But it does keep on working pretty well for all the financial education programs that we develop. We do use the same methodology, and we use these 2 thread lines. Let's learn how to make better decisions, and let's use daily life examples so people can relate to the topic. A museum is powerful also because it's not. This that I'm going to say, probably sometimes my colleagues get mad at me when I say that museums do not teach anything. We don't aim to teach anything. People learn because we all learn all the time. You learn when you cross a street, and then you're not pushed by a car or a bike. But museums are really places for incitement, for discovery, for opening new ideas to people. When you visited for the first time in your life an exhibition about Impressionists, for example, you were mesmerized by what you saw, you loved it, you wanted to go back probably you wanted to know more about Impressionism, but if you were asked at the end of your walkthrough, what were the name of 3 of the painters you just saw and impressed you so much, probably you wouldn't remember them. And if somebody would ask you to paint a painting in an Impressionist style, that would be impossible. So we don't want people to become economists, or we don't want people to become financial able. We just want them to understand that this is important for their daily life and that they need to foster more information and get more acquainted with the topic. It's impossible to think that in a visit of 1 hour, 1 hour and a half, you will get it all. And I think that it's more important to awake, to incite, to open a new interest in people's life than pretend that because they visited your museum, they can calculate an interest rate, for example. School is different, and workshops are different, and there are other possibilities. And this is why we really think in Mexico that it's so important to make financial education part of the school. So after all these years, the museum has become a forum for free exchange of ideas. We have all this interactivity. Is not necessarily technology-based, even though there's technology everywhere. Technology is not the main character in the story. What we really foster is for people-to-people interaction. And most of the time, the interactive experiences are just helping to make this interaction more fun. Like for those of you who visited, I want to remind you about the market simulator, for example. You're playing, but you're not necessarily playing with a device. I mean, you're using a device to buy and sell, but you're playing because you're having conversations with other people. And we really believe in conversation as a very important pedagogical tool. And just to end this thing about the museum, I just want to say that MIDE has become also a very important laboratory, because the museum is there, our audience is there, we know who our audience is, and we test everything there. We test new ideas, we test new mechanisms for communication, we test our programs, we test programs we design for other institutions. So this laboratory is very exciting. People visit it as a museum, we see it also as a lab. So this is what the museum is all about, and I think that this is why museums have become so popular, because they are open to everybody. And once you enter a museum, you are the same as the rest. Nobody's going to ask you what your background is. They don't know if you studied economy or you didn't study anything. If you sell the newspaper in the corner or you have a PhD, everybody in the museum is equal to another one. So they are really very interesting places where to learn and where to be exposed to new ideas. I don't know if you want me to go on with some of the things we're doing, or you want us to keep on talking about museum?
2 minutes on some of the things.
2 more minutes? Good. So let's say that talking about financial education, what has been happening in Mexico lately is really interesting. Of course, financial education has become something of the interest of the authorities and previous governments, and we hope our present government, because there's been a lot of interest in financial inclusion, and because it's clear that financial inclusion above access and use and consumer protection requires financial education. In fact, we believe there's no inclusion without education. And it's very interesting because since 2012, we've had several national inquiries, several national polls about financial education, and it's important that those results are taking into account whatever we do. And just to open it to the discussion later, MIDE has developed a lot of tools for financial education. We recently have written 5 different books for different levels of the first 12 years of education. We have a lot of relationship with schools and teachers. We have a call center and more than 90 lessons for schools on different topics adapted to the Mexican system. This kind of material has been adapted to other systems as well. We produce educational programs for other institutions, and we produce educational programs for our own museum. And this means not just the basic topics which are there for all of us, but also new topics like topics of education related to the digital era, to the digital media for financial intermediation. I would like to talk about this specifically, but probably in a second round when my colleagues have had their opportunity.
Okay.
Thank you.
Thank you, Silvia. Thank you so much. So one way, Asia, particularly China, is leading in the global digitalization. I mean, it's probably the most dynamic market, which means, with companies like Ant Financial, which is, innovating constantly and really changing business models. However, it increases the risk, like what we were talking about this morning. So I think your role as a finance museum is ever changing because you have to adapt to these technologies and how people are using the technologies. And you're ever more relevant on how you adapt the digitalization, I can't say that word either, into financial education. So how are you sitting in the probably the most dynamic market addressing this?
Thank you. This is my honor to be here and to share my idea and learn so much from this morning. And thank you for Silver. What you say exactly was our museum. For the same situation, I 100% agree with you, so I just cut my short. So I just share my story, my personal style. I'm not presenting for China, but I do show very my personal experience. So you can see how the market changed. Actually, Silver and I are partner. We are same board of the International Federation of Financial Museum. We share the same mission to financial literacy. But she from the good hand. She's professional scientist and tend to respectable. But I from the bad side, I'm businessman. I'm doing the business for 30 years. What business? Probably the very cool business. I selling company when they hire, or buy company when it's cheaper. They call invest banking is merger acquisitions business. So I doing that for 30 years. And a lot of people in China especially hate us because China is central planning economy. Everything arranged by government, by party. Why you guys disrupt the social stable status? You change, you disrupt the company, you build new one. This creative is not allowed in China. Think about 30 years ago. So when I start my business, I'm one of the first pioneer to do M&A in China. I'm really bad guys. So what I'm doing, I'm lined up with other bad guys doing the same job. And then we build up China M&A Association. 18 years ago, only 13 people. Now it's 12,000 people. National power is very influential in China and has accepted by government. So this is what my story in the business. So we feel if you're the bad guy, united together, we can do some good thing. And then that's 10 years ago, I accidentally visited the American Financial Museum. I love the Financial Museum in the Wall Street 8-foot. It's a beautiful done, small museum. There's not too much relics. It's only idea and promoting video something. But you go there 30 minutes, you feel the whole 200 years American financial history. I love the idea. And then I return China, I decided to build one. because I do all my financial career in 30 years, but people hate finance, hate money. They think money dirty, and I don't want to end up my career disgraceful. So that's why I say I want to do a museum, just one motivation. I want to make the finance business glory. So I lined up 2,000 years, the most important ideas in finance in China. Most important ideas, the most important financial event, most important financial people. The idea, event, people, the three factors together, we land up with time zone. And we build logic. The finance can promote economy. It's a part of civilization. Without finance, the human can never go such far. So the only message to society is money is good. Finance is a friend, not your enemy. You should learn that. You should live up with them. And that makes you feel safety. You get real understand money. You use them. You could get number one, safety. Number two, freedom. Number three, happy. So that's the only motivation what I do. So I'm not sophisticated financial education. I'm just like a one thing, make a financial part of civilization. So that's why, because I'm doing so many years financial technique. So I built my first museum 9 years ago. It's non-government, non-for-profit organization. I invest all my money first. And now we turn out 11 museums in 10 cities, including Beijing, Shanghai, all the major important cities in China. We have a museum, and also include Hong Kong. So now we have over 3.5 million people visit us. On the Chinese Twitters, Chinese media, there's a lot more people know us. The China Financial Museum has been an icon in a way. So that's why I think so what we do, just like promoting finance, like every people, more people get know the financial future. So what we think our museum, just like Silver mentioned, is not about history. We discovered history. Every generation had new view about history. So we rediscover every 10 years probably, even 5 years. We always discover. And then most important, the Finance Museum is about the future. So we say discover history, shape the future. So this is why we built the first fintech museum 5 years ago. We talk about the Bitcoin. We talk about the blockchain museum, blockchain. And last month, this big thing happened in the world. The Facebook announced just 3-4 weeks ago, they will deliver labor, the coin. It's a global coin. That's a big thing for China. So that's why we immediately, second day, we hold a meeting in Beijing, 200 people that include 2 central bank governors join us. And then last week, we in Shanghai, and next week in another city. So we have educate labor. It's not just labor, the coin, it's the future. I think the labor coin, the labor things come out, like a blockchain, like Accion, Bitcoin, will totally reshuffle the financial infrastructure. So we had to know what's happened. Otherwise, we face big risk. So that's museum doing, what we're doing in China. So we always upfront touch the palm of economy, financials. We give every big financial things. We try to discover the whole situation, the futures. And last year, we got Hank Paulson come to China, Rhyne discussed with the former governor of central bank 10 years ago. They are partners. And now 10 years later, they discuss what happened the last 10 years. And there are 7 Nobel Prize winner economy delivered speech in my museum. There is 100 ministers, different, not only finance, culture, every field of ministers. They just come to my museum to share their idea about future. So those people love it. So that's why we open every city, like a 7-Eleven. Now 11. So just we want control. Otherwise, we could open more. Now, of course, China is so big. So we are very, very proud of it. For me, I feel each new museum is a new challenge for me, because the museum is totally different. We had an insurance museum, we had a fintech museum, we had an M&A user acquisition museum, we had the coin museum, currency museum. So we are about to make a blockchain museum. So anything happen, we just design something. We take a museum as a platform to educate people, promoting new ideas. So that's my museum. So now we have the 200 staff. And the good thing is, after 5 years I've invested, now it's got even. We don't sell any ticket, all free to society. But because we are influential in a way, so a lot of companies sponsor us. So now we get even. So that's why we're getting more influential in a way. So the thing is, when this morning I sitting here, I just, a couple of things I feel the challenge for us. Just number one is the new framework, financial framework, is just shaping by the so-called digitalized finance, from the P2P to crowdfunding to the blockchain things. Everything is changed. It's changed so quickly. So even we think we are financial professional. I work for 30 years. We think we are professional. We are seasoned worker. Actually, to the new things, we are illiteracy. That's something. So when we had the Chinese similar conference, every year we had a 200 conference, just like 200-300 people, sometimes more people. Every year we have to. Most recently, most of our conference, the people sitting in the audience under 30. They are very young, and we are sitting there. We learn. So So that's why I said, Silver just mentioned, we are not educating someone else. We electing ourselves. So we had to learn what we feel comfortable as a financial literacy now has been shaking. What is real digital financial literacy? Digital financial health. So we don't know yet. This is a challenge. And what we do right now, we just try to catch up anything with the young guys. So that's why we organize so many forums. We give them so many ranking. So top P2P, top 10, top 20, Bitcoin, something. Just let young people understand the future. Maybe it's not safe. It's some risk, but most important, most risky things you are not know there. So that's most important. So I think we are just starting the new museum platform. It's still small compared with China's size. We had 11 small museums, very active. So we think this is a very good conference here. We hope, just like Silver and I, a couple years ago, we built International Federation of Financial Museums. Maybe we could work together to design digitalized financial health standard, benchmark, criterion. Let's make a global one, because even China, United States right now conflict look like a globalized, but in the digital networking, digitalization, we are one world, one village. So probably we had to speak the same language. We had to start doing something, set up the framework, dynamic framework, and the leader, probably not us. We probably try our best to catch up. The leader should be young guys. Those people under 30, they are digital native. and we should give their space to play their role. So that's, when I sit there, I think this is a good conference. I love the topic. Congratulations. I hope if anything we can do in China, we could join this one. We love to do that. And not only our museum, because we think we are pretty active, not only finance. Because we have so many financial connections there, we can do something more to join the global effort. The last word, I think a lot of people mention your museum like us. Are you a museum? Most people say, what's your most valuable asset? When you talk about museum, some people like stones, some relics. What's most number one? Give me one example. I always say, well, my assets, the core asset, my museum core assets is my people, our team. We are the best assets for the museum. That's it. Thank you.
Thank you. Raymond, before I introduce you, I have to commend you on your shoes. I see that you take your job very seriously. I don't know if you've had a chance to see Raymond's shoes, but I invite you after the panel to check them out. I think they're quite unique. So Raymond, you have a different perspective from the European Banking Federation. I mean, you're a network of the European banking associations. And so tell us, how are you addressing financial education and specifically the topic of digitalization? We saw a peak of your program, and so tell us what you're doing.
Where to start? And there's an awful lot to say, but let me go to the essence of what we do. The European Banking Federation is the trade association of the European banking sector in Europe. Our members are not banks directly, but national banking associations. So it's the Spanish banking associations, the AIB is a member of EBF. And imagine that is the case in 28 countries, in 32 actually, all of the EU countries, plus the EFTA countries, Iceland, Norway, Liechtenstein, Switzerland, plus also part of our community are the associate members, and that goes all the way down to Baku, Turkey, Serbia, Albania, North Macedonia just joined, but also Belarus and other countries not part of the EU. We work very closely together, and especially on the field of financial education, we try to cooperate as much as possible. 5-6 years ago, there was an initiative to set up a European Money Week. It came out of the Global Money Week and the Dutch Money Week, originated in Amsterdam. And we decided at the European Banking Federation, let's harmonize all our activities on financial education and financial literacy into that single week in March, the second week of March. And any member doing activities on financial education, going into classrooms or holding conferences at a national level such as this one, we would encourage them to do that as much as possible in March. And that helped us grow over the last few years to turn European Money Week into really a regular yearly fixture on the European agenda to highlight financial education. We do this through the Financial Education Project Group at the EBF, which is a group of really committed people on financial education, on financial literacy. And because we have such a strong commitment from our members, we're able to move on beyond just organizing national activities in that week. A few years ago, we came up with the idea, for example, of the European Money Quiz. Can we do something that directly goes into the classrooms? And we said, okay, let's see if we can do this. We had this partnership with this company called Kahoot. You just played that. It's a company based in Norway. And we said, okay, if we can find 5 countries to join us, we'll turn it into a real European money quiz. And all of these 5 countries then were supposed to play the quiz at the national level in their own language, and then send the national winners to Brussels, where we would play the European finals. And I promised with my team, okay, we'll translate all these questions to all the kids coming from across Europe into their own language. So the idea was to play a European final where all the young kids, 13 to 15-year-olds, could answer the same questions, but in their own language. Little did I know how much it would take to translate all these questions. And that was actually quite a lot of work, given that we did not have 5 countries joining, but 32 countries joining in the first year. So we were a bit taken aback by the success of this, but in the end we had more than 40,000 kids play in the first year. We continued to grow that this year, and when we had the final count of the participants this year, we were well over 100,000 kids in Europe. Now, is that a lot? It certainly is a good growth, but if you imagine that there's tens of millions of kids in Europe in that age category, you realize that there's still an awful lot to do. The one thing that we realized based on our experience with the first quiz was the need for teaching materials. And the first year we had some questions, just think up some questions on core financial concepts, but we had the teacher calling us from Norway, and her classroom came in 52nd out of 100 classrooms that participated, and they loved it. She loved the quiz, she told me, but can you help us with teaching materials? And we realized that we didn't have anything like that. So this year we added a new dimension to the quiz project. We had a book on financial education that was produced in Iceland, in Icelandic, but that was very popular in the schools in Iceland. And we had that translated this year into English. I should have brought a copy with me, but it's the basic the first steps in finance. A very simple way of explaining how finance is important for young people and what you need to know later on in life. And we translated that into English, and we are now making that available to all the countries in our community. And it looks like we'll have more than 10 different languages of this book available. And again, here it's not the EBF paying for distribution, but it's done at the national level in the countries that participate. And one thing that we learned about financial education as well, there is no such thing as a European solution for this problem. The real solution needs to be found in the national context, in the own national local language, because you cannot impose something from Europe in this respect and try to make that work. That will not work. But what works are local solutions inspired by other countries. That is perfectly all right. But the local experts know best how their educational system works and what is possible. You also have different laws in Europe. We see, for instance, in Hungary that you have financial education as part of the curriculum. The government says, well, you're a school, you're obliged to teach financial education for 1 week a year, and how you do that is up to you, you just need to do it. That's in the curriculum, and that also shows that there's a lot of people who are actually being educated on finance in Hungary, simply because the law requires them to do that. Is that something that other countries could look at? Maybe, maybe not. I mean, it completely depends on your national context. Apart from the work on financial education in Brussels, and I'll make that point more briefly, but I think it's important as well, is also our engagement with the European institutions. The EBF basically is the lobby group for the banking sector. So we work a lot with the European Parliament, with the European Commission, with the member states in Brussels to talk to them about policies, about European regulation. And we've been trying to get them interested in European financial education as well, financial literacy. And that has been a very tricky thing, because they tried to do that 10, 15 years ago, and they concluded, no, there is no room for a discussion on financial education in the European context. And the only thing they throw back at us is this Article 15 of the Mortgage Credit Directive that was agreed in 2014, and that has one paragraph in there on financial education, which basically forces the European Commission to look at this topic and to come up with a report next year in the context of mortgage finance. Now, is that what we want? No, but we're not really calling as European Banking Federation for legislation. We're not calling for project funding. What we really want is a bit of leadership at the highest level of the European Union as well. We hope that they can recognize the importance of financial literacy or financial education for all the reasons that were addressed this morning, also for the economic context, for financial stability, for financial stress, and especially in the digital age, this is becoming particularly important. The digital age presents a lot of opportunities, but also a lot of risks. And we need to make sure that our younger generation is aware of these risks in finance so that they can make the right decisions. I really believe, also as a parent to 2 daughters, that financial literacy is a life skill in our digital age. And it's not only the banking sector, but it's the entire financial ecosystem that needs to be part of this. And also the importance of not just the private sector or the public sector. It's a partnership that we need. Public-private cooperation, as was highlighted also by the OECD, and I was very pleased to see that the OECD in its policy recommendation also underlines the important role of the private sector and of NGOs in this space, and that the OECD now actually is encouraging governments also to work together with organizations like BBVA, EduFin, with the EBF, and also with the finance museums. Because when I hear you talk about these finance museums, I haven't even talked about our own finance museum project, but we have one coming up in Brussels next year together with the Bellevue Museum, but that's for later.
Thank you.
Well, congratulations on that, Raymond. So, I mean, I think you've touched on an important point which we've been discussing this morning. The digital age represents opportunities and risks, where over-indebtedness, easy credit at your thumbprint is a real risk. So this is a real challenge for you, right, for the 3 of your institutions. How are you measuring success? What kind of KPIs are you taking into consideration? I mean, this morning we heard from FloreAnne that OECD considers impact assessment as a key part of financial education, right? Because you can do many things, but if you're not measuring how this is impacting the public, and Silvia, you mentioned that everything you do is based on market research. So you're first understanding what the challenges are, and then you are designing programs to address those challenges that you've identified through market research. So that's the beginning. But how do you look at the end? How do you, I hope, in a way, iterate what you've been learning in all the years that you've been operating to continuously improve what you're offering the public, and how you're adapting, to your point, in China, to the new technologies and to Facebook announcing that they're going to have Bitcoin, and how you're going to be incorporating that into your programs. What are your specific KPIs?
You know, it's a very, very difficult question to answer. Not because we don't know, but because of the kind of experience we offer. You cannot evaluate immediately the effect on people. I mean, you cannot wait somebody at the entrance of the museum experience and then wait this person at the end of the museum experience, yes, and then calculate how much of an impact you have made on this person, which might sound kind of silly, but precisely what you do in school is that. When schools evaluate, that's what they do. So we're very much, and then it's very difficult to follow people's lives and see if you have impacted them or not. In fact, in these kind of museums, science centers, science museums, experiential places, the impact can happen immediately, 1-2 weeks later, in a month, in a year, or never. I mean, it's not necessarily that. I'm not trying to escape the question, because we do follow up in the museum, and we have a monthly research that adds up as an annual research that tells us how satisfied our visitors are with our experiences. We also evaluate the capability of our programs to communicate the concepts. So we do not evaluate the change in attitude or the change in behavior, because it's very difficult, as we don't have these people coming back every day or every month, but we do evaluate the way in which we can communicate. Yeah. And I want to escape a little from your question, just to try to explain how complex this might be. Just let me give you an example. When we opened MIDE to the public 13 years ago, in July, it's on the 14th of July, 2006. It's about to be 13 years. There was no Facebook. Facebook was launched into the world that same year. So when we were designing the museum, there was no Facebook, there was no social media. It was just blogs and things of the sort. So our audience at that time was totally different from our audience at this time, even though it keeps on being between 80% and 85% between 15 and 25 years old. But those that entered 14 years ago as a 15-year-old older is now somebody that thinks and communicates in a different way. So we need to adapt constantly the way in which we communicate to people. And every time we design a new program, we try to do it taking into account the new ways of communication, because that changes. And if you don't change that, you are not speaking to receptive ears, because your audience is not listening to you. This is something very interesting and important. And when I say this, it applies to all what we all do. If you don't change the way in which you communicate, if you don't change your language, then you may be speaking in front of nobody and it's the same effect. People will not listen. People will come into our institutions and just walk around and will not stop and will not engage because they will not be familiar to what we're talking about. And I think that this is one of the most important challenges in terms of the digital era, that, you know, instead of making telephones forbidden inside the museum, for example, which would be so ridiculous, because there are many research, there's a lot of research about this. Of course, there are some of our visitors distracted doing something else, but they would be anyway, even without their phones. But some of them are interacting, some of them are looking for information, some of them are doing interesting things. So if we propose at the museum something interesting to do with your phone, we will catch their attention. Instead of searching them and saying no phones in here, they would go like, and then what? How can I do it? I mean, it's very important to adapt to our audience's language. Yes. And that's it.
Yes. Yeah.
One way?
I agree with her. Actually, we are not central bank. We are not financial institution. We are not powerful. We can't make history, certainly. So we don't want to take like a performance, like KPR things. We, how to say, just like we can't take that unbearable heaviness of being. I just want to quote
Milan Kundera.
That's right, Milan Kundera, right, heaviness. So that's too heavy for us. But three things I will mention. I think so we could very wisely use our leverage, because museum is kind of reputation influential making business. So for the young entrepreneurs, we try to identify them when they are very young. They are influential. We try to make them voice louder, influence, promote them. So that's what we can do. And for those successful guys, no matter how you success, how you're powerful, they want to be remembered by history. So we select you is kind of representing history. So that's why so many celebrities want to deliver speech in museum. And for those regulators, we are bookkeeper of financial history. You had to supporting the future, not the other way. So let them get alert, someone looking for you. So that's why that's the influential for the museum. So what we do, we try to carefully balance this one. We try to update, research, and discuss with young and regulators and government, also big guys. So try to compromise. So that's our performance. We try to balance. We don't want to use in bad way. So that's a way. Sure, let's see. Okay. Yeah.
Silvia, you look like you really want to say something.
Yeah. You're more also.
Just two things.
Powerful.
I'm always intrigued by the example that the Museum of American Finance uses.
Yes.
A small museum that you
Yes.
referred to in New York.
Yes.
And they underline the importance for the economic success of a country. They link that in history over the course of 300, 400, 500 years
Yes.
To financial knowledge, financial literacy. And education is a part of that. When I'm a Dutchman, our country was occupied by Spain in the 17th century, and trying to become independent, they were looking for finance, and they looked for creative ways of obtaining finance, which eventually led to the creation of a stock exchange. Let's issue some bills, and let's people share this risk of these boat journeys that we do to Asia. And eventually that led to a financing system that made the country so prosperous that the century that followed was a golden century. Then a century later, the British saw what happened, and they improved the Dutch system. They also understood the financial knowledge, and it became a fantastic 19th century for the British economy that still resonates. The next wave in this development was the development of the United States, and that's where the Museum of American Finance makes that story very clear. That's how Wall Street came into existence. That's how the great American economy came to grow. The next phase now is, of course, happening in China with the fifth wave of human development. So if you're asking what is the critical success factor of financial education, I think there's one answer also to be given in a very big, major historic economic context. The practical answer of the benefits of teaching young children on financial education, I think we really do need more research on that. The research that we have is mostly research in the United States by Professor Lusardi, also research at many universities. I recall an example from a university in Wisconsin, and they started tracking a high school class a number of years ago. And they said, okay, we start with this class of 2015. We measure them, we follow them, and after 5 years, we take the average credit rating of all these students, because these credit ratings in the United States can be looked up. So that's our benchmark. Then the following year, they started teaching financial education to the classes, and they follow the students throughout the years, and they are trying to detect if improved financial literacy through better financial education has a positive impact on your credit score in the United States. That study still goes on. It's a 7-8 year study. It also shows how difficult it is really to measure the impact of what you do, of specific programs in an academic context. For us, the European Money Quiz, the only objective of that one was to get classrooms talking about money. That was the only objective. Nothing more ambitious. We just want people to talk about money. Just like my shoes. These are my financial literacy shoes. And whenever I wear them, people start talking about money. Not always positive, but you get the topic on the table. And in that sense, that's where it starts. We have a broken relationship with money, and that needs to be fixed.
Silvia.
I want to say something about evaluation. You asked about our own KPIs, but we do have research and we do have results in some way. I think SEMLA has done a wonderful job, and they have enlightened us in some way. I think that the result of education, for example, is sometimes measured in terms of customer behavior. Do they get into depth less or more? Do they save more or not? And I don't think that that should be the standard. I do believe that financial education should be, or economic education, about making decisions, and then it should be about the impact in people's well-being. And that is why our approach is very different from for example, the American Finance Museum in the US, because we are absolutely aware that we touch a lot of underserved population. And I've been thinking about this a lot lately. We should not, I don't think that one type of financial education will fit all. Because probably the financial instruments, the services or the products are more or less similar to all, even though an underserved community is never going to be possibly thinking about certain type of credit or certain type of investment. But let's say that the basics, which is how do I manage my money more or less in order to what? To provide me with well-being for myself, for my family, for my community, and then you can think about other superior levels. So it's about well-being, and I think that there are data that shows us that when people are touched by education, they improve their standard of well-being or their hope for well-being, or understand better how to achieve well-being. I think that's success. That is success. And I think that's why it's so important that everybody has a little of education in terms of economy and finance. We at the museum, we recently changed our mission and our vision. At the beginning, the mission and the vision were to make people aware that economy is in their daily life and that information is very important for decision making, more or less like that. Now, our mission is to, let's say, I'll start with the vision. Our vision is to promote education that will lead to critical and creative thinking, because in an era of fake news and fake information and this undiscriminated information, it is important that people have access to discriminate, understand how to discriminate this information. And then our mission, very interestingly, says, and we use the lens of economy and finance to understand, well, in fact, it says economy, finance, and sustainable development to understand how the world works. And that's the point, how the world works. So it's not just about the use of a certain instrument or a certain service. And I think that when we feel free of teaching about how to use a certain service or a certain instrument, we will transcend our educational endeavor. And I think that's very important. And mainly now, just to honor the title of our session, we never got there. This digital financial education is very important because, and I'm just going to drop this idea over there, because money has become intangible in the digital era. And that is going to change the whole situation. And I think that's important.
Thank you, Silvia. I think you touch upon a very important point, and you know, we've been hearing from former Minister of Finance, central bank, you know, the regulatory side, the international organization side. There's an entire ecosystem around finance, and at the end of the day, finance and economy is the motor of a country, right? And how people leverage what's available to them also represents their own moving forward, as we heard this morning. So my question is, financial institutions, hence banks, who you represent, Raymond, what is their role? Because they benefit or perhaps not benefit for over-indebtedness if they don't repay, you know, that sort of thing. They have a kind of an interesting position within the ecosystem. So in that public-private responsibility to a consumer and everything that involves consumer protection, what is the role of banks in financial education? You know, BBVA, who is sponsoring us, has played a very important role in financial education in Mexico, right? So what is your view on not specifically BBVA, but banks in particular, and how they should be addressing financial education?
Long answer and short answer. Banks are a natural partner in the ecosystem for financial education.
Yes.
Banks do not have any exclusive ownership in this space, but it's in the interest of banks for financial education and financial literacy to be successful. We want clients to be well informed when they make the decisions so that they make the right decisions. When you make the right decisions, you get more prosperous clients. You also get, when you look at financial literacy, better entrepreneurs who know how to manage their business more properly. That means less debt that is problematic. We know what happened in Europe with the problematic debts. I think it would be fair to assume that had everybody been aware of the financial pitfalls, then people would have thought twice about getting into debts that they cannot get out of. And there's also a social responsibility because banks are so influential in this space. Banks need to act here and be seen. And admittedly, yes, there was also a reputation and trust problem with the banking sector. And of course, it's also about repairing, it's an opportunity to repair the broken relationship that the banking sector has as a whole. It's part of responsible banking. It's part of the responsible banking principles that are being discussed at the level of the United Nations. Those are also things that you need to engage in as banking sector. And yes, there are banks who are doing this very proactively, and yes, there are banks who are doing this less proactively. But as bank sector organization, we can confidently say that yes, we need to support these positive initiatives.
Now, but should banks be selling their products as part of their financial education? Should there be a separation? Is there a conflict of interest? You know, let's dig a little deeper there.
We consciously created a brand for European Money Week, a money quiz, because when you see financial education, people like to have a brand and a logo on something. In the application of the money quiz and the money week, we are very conscious that we do not allow any bank branding to be associated with this. The only brand that you can use is the logo of the money quiz, and that's the bank federation behind it, but it can also be used on its own. And we discourage members actually from having bank brands being involved in the classrooms. We had some positive examples also in the Netherlands that are now being copied in France. Bankers in the classroom as teachers, as ambassadors of, as teacher aides for financial education. The project in the Netherlands is very successful only because the bank volunteers going into the classroom are not allowed to say which bank they work for. They are a banker, but banks can send staff as volunteers into classrooms, and they work with the Bank in the Class project. The French society at large was very reluctant to have bankers come into classrooms to say, oh no, but the French Banking Federation organized a project called J'invite un banquier dans ma classe. I invite a banker into my classroom. Very reluctant. They started a few years ago with 16 classes. They brought in a journalist and they realized, hey, this is not about marketing of financial products. This is really about financial education, making sure that people understand it. And that is actually, it was so successful and they had such positive traction based on this press coverage as well, that now there's close to 1,000 classrooms also in Paris or in France being visited by bankers during European Money Week. Does that mean that we would discourage banks from taking their own initiatives? No, I think the space is big enough for everybody to do what needs to be done. There cannot be enough initiatives on financial education, but from our context at EBF, we discourage the use of bank branding.
Well, in the spirit, do you want to say something?
Oh, well, because they talk about private sector, so I think we'd like to add up a little story about the government, how we deal with government, because everybody talk about when they ask me about China. You have a very big government to deal with. Yeah, because central planning still. You know, the communist ideology is not so much favor about money, right? They hate money. Even Karl Marx write the Capital. So this is when we start financial museum, we had to deal with the government. And last year, I think this is one of my great achievements, is we built a unique financial museum in the mountain, in a high mountain, small village. This is called Jiangxi, called Jinggangshan. It's very, only everybody in China know that, because China has 80 million Communist Party member, 80 million people. And they all worship to that village because 90 years ago, the communists burned there. They start struggle, guerrilla, and then finally take the power. So this is like a Chinese communist Jerusalem. So I just try to make a museum
stamp there, huh?
in the Jerusalem of Chinese Communist Party. We call it the Museum of Revolutionary Finance. The people love it.
Brilliant.
Because we are not talking about the red car or something, right? Not just rebellion. We put there, there's vertical things, horizontal thing. We talk about China Communist Party, how money relates this revolution. And we talk the French Revolution with money, Napoleon Bank. UK's Glory Revolution with the UK Bank, American Independent Revolution with the American Bank. So we get the horizontal global one. Money change system, and system will change money system. So that's the, and also we make a vertical from early making money, fake money, to the blockchain, to Bitcoin. So all revolution. So we horizontally, vertically change the whole concept, revolution in finance. And at first, everybody think this is so dangerous there. But now, every day, about 500 at least people visit there. Because whenever people go to Jinggangshan, they go to my museum. So there's a best window. So we change the idea, the money change system, and the revolution. It's not just a communist party everywhere. So I think this is this great achievement of us.
That's definitely a good measurement of success.
You have to design something.
Yeah.
Okay.
Yeah.
Yes, that story.
Well, unfortunately, we're out of time. I wanted to, in the spirit of interaction, ask questions from the audience, but I don't think we have time. We do? Okay, great. We're standing between you and lunch, but please, if there are any questions, actually, maybe one or two.
Yeah, if you have any questions, you have a microphone on your chair, on the side, on the arms. You open a little, there's a little pocket, or there's a little, there's a microphone there. You can turn it on and ask your questions directly, or just raise your hand, either in English or in Spanish, right? Did you find the mic? Yes, in your arm. Do you have it? You turn it on? Excellent. Tell us your name and who is your question addressed to, please.
Well, thank you. Good afternoon. My name is Sebastian, and I'm working as a journalist in Colombia on the newspaper La República. I have a question for the three of you. If one of you can answer, it's great. For example, in countries of Latin America, we have the problem that not all the population is connected. Actually, one of the biggest challenges of our new president is to give internet connection and 5G networks to mostly 40% of population which lives in the fields and outside the center of the country. So how can we help this population to give them financial education, taking account that they, digital financial education, sorry, taking account that they don't even know how to manage the internet and connections because they don't have it yet? Well, that's a question.
I think.
No, you go first.
Maybe I should start. I have something come to mind. And
come on, make up your mind.
Yeah.
Of course.
I hear great stories in Africa, the revolution with the mobile phone network, the mobile banking services. There have also been some interesting research studies done on saving. Whenever you have a problem in your household, your washing machine breaks down, do you have the money to buy that straight away? You should save for that and to have a little savings for that. But the same applies also into micro economies. And there was an example of studies of people living on $10 a week that they could still save, and they would be encouraged to save, and they would actually have a savings coin with a machete they would scratch in it. Nothing digital, but still saving as a concept was possible in a very analog condition as well, and could be effective and make these people better prepared for whatever future they would face.
You know, I think that internet is overcoming a lot of problems, and it's just a matter of time, because it's much cheaper to bring good internet to any of these places than the whole infrastructure that is needed, not just for banking, but for many other things as well. So at least in Mexico, we have seen a growth in the access that is amazing, and the private companies are really working towards that because it's good business. And of course, they have a lot of support from the government because they are really helping to bring a lot of stuff that has not been brought before to these areas. And look at this, it's not just financial services, but it could be very, very soon medical services. It could be very soon other kind of advice, and everything related to education. The tendency that the sales in smartphones in my country is amazing. We're around 120 million Mexicans, probably a little more now if we take in account the 25 million that live on the other side of the border in the USA. But let's say 120 million Mexicans and more than 80 million devices. And this doesn't mean that everybody has one, but it does mean that a lot of people, every time more, will have access to these. So, and the growth is really amazing. The graph is really amazing. We at MIDE, we are right now, and hopefully next time we can present that because it's going to be really interesting, we are designing the digital MIDE because we want to reach everybody in the country. And this does not mean that we're going to put up in the web the experiences we have in the museum, because those experiences are designed for a physical site. So we are now designing something special and different for a digital environment. And I think this is very, very important. And about the private sector, I just want to say, I think it's a joint venture. I think it's a joint venture between private sector and governmental. But the government has a very big load, which is to make it mandatory. I mean, it could be a choice for the private banks, but it should not be a choice for the government. I think that everybody, me, a biologist who knew nothing about economy or finance when I got this job, I can tell you, because I am a convert of my museum, that it's amazing. I was willing to express any opinion about anything, knowing nothing about economy or finance. I think it's mandatory. People need this basic education.
Perhaps we can take one more question from the audience. Everybody's hungry?
Hungry, yeah.
Hungry.
Okay. Well, please join me in thanking this amazing panelist. Thank you for sharing your experience.
And please join me in thanking this lovely Liliana Pozo for being the moderator for this panel. Thank you so much. Let's take a picture of the four of you here now that the photographer is here. While you have lunch and check on Raymond's shoes, enjoy it, and we'll see you back here at 3 o'clock. Okay? Thank you so much. Bon appétit. Hola, buenas tardes.
Good afternoon. Good afternoon and welcome once again to the EduFin Summit 2019. This is the most difficult moment of the day, which is just after lunch. People never want to have this slot, but the next panel members will be ready for everything. There are no scare, there's no pain, no mercy. So how was lunch? Was lunch okay? Were you able to eat? It was really quick. I know, people say that in Spain we have siestas, but it's not true. I would like to remind you that we have a hashtag. This morning, Twitter was on fire with our hashtag, with tweets on topics that were mentioned this morning. The hashtag is just up there. I'm not sure if you can see it. It's BBVA EduFin Summit. We also have the YouTube channel where you can watch us through streaming and you're not sleeping either. No siesta for you either. So there you are, so that you can tweet comments, etc. about our members, of our participants. There's been quite a lot of interesting information in the morning. Let's see, now we're going to have to see this afternoon. So I'm going to switch to English now. And hopefully I won't have to say digitization in English, because I see that 3 intelligent and beautiful women in this auditorium have problem with that word. So obviously the problem is the word, not us. And I leave it there.
Times, 4,000 years ago, we have used an abacus for our financial calculations. But think how much has changed in just the last 10 years, thanks to digital technology. Are you thinking? I'm going to help you. With voice recognition, we can just ask Siri or Alexa, and the calculations are done for us like this, automatically. To moderate our next discussion on the technological advances in the financial sector, it is a pleasure to introduce the head of corporate responsibility, you all have these long titles. The head of corporate social responsibility and member of EduFin. Here he is, José María López. Adelante, José María, please join us. Yes. This is a fantastic moderator who's taken the challenge of moderating a panel after lunch. Let me introduce his guests. We have first the Deputy Director of Bruegel, Maria de Mertzis, and our winner of the Kahoot questionnaire this morning. Well done, Maria. She is, obviously there's a lot of clever people in this room, but she's the fastest. Clever and fast. Then we have the Director of Junior Achievement España, Spain, Blanca Narváez. Bienvenida. Welcome, Blanca. And last but not least, we have the Vice President of Financial Education at EduFin. He's Rhyne Swift. Welcome, Rhyne. Here they are. All yours, José María.
Muy bien, muchas gracias. Me ha gustado lo que decía Elena de lo.
I liked what Elena said about the 4,000 years of history of finance, because that links us to the previous roundtable. I also like one ways when he said that finances are part of civilization. And I think this fits really well with the topic of this roundtable on financial capabilities for this new era, from the abacus to the chatbot. First of all, I would like to thank, on behalf of the EcoFin project, which is a financial education project that I'll mention briefly. I like, on behalf of its director and myself, to thank BBVA for inviting us to be here. It's a pleasure to be here. What we have is a financial education project that started in 2005, publicly in 2007. It's called EduFin. It's funded partly by Unicaja Banco. We do training sessions, workshops, books, also a financial education conference. And so if you'd like to go into greater depth, you can go to our website of EduFin, edufinet.com. One of the main projects that we hope to develop in 2019, and that is linked to the digitization, is a video game for young people so that they can learn about financial education. So that's also deeply linked to our reason for being here today. And before I introduce the real protagonists of this roundtable, I'll briefly talk about the structure that we're going to have in this roundtable. And I would also like to introduce the topic with certain nuances. We've drafted a paper that will be published at the Center for Financial Education over the next few days at BBVA. So for the structure, after this brief presentation, we will have first Maria, then Blanca, then Ryan. Each of them will have 15 minutes. And after that, we'll have a debate, a discussion, depending on what you've spoken about during your first 15 minutes. And the last few minutes, we'll hope to open up the session to the audience, hoping that they will have some questions for the speakers. As for digitization and financial education, I think that digital transformation is key to all of this. Everyone's talked about that, but there is still a lot left to do and a lot left to reflect upon. This process of digital transformation has had an impact, a full impact on the financial system. New technologies and the regulation have led to the appearance of new finance services providers and new services offered by them. I think a paradigmatic example in Europe and probably in the rest of the world are payment services. We have a payment services directive that allows users to have information on accounts and initiate payments, and that's where the transformation is starting, and this is going to affect traditional banking. From being a heavily regulated sector, the trend is that increasingly more this sector will be deregulated. And I think the last barrier left from the regulatory aspect is deposit capturing. That takes us to other areas that affect monetary policy, the core of banking, etc. In the process of restructuring the Spanish financial sector, and also since the European Union banking was established, and in 2016 we had a resolution that is not enforced yet. Since then we have the VinTech and the FinTech. And I think it'll be interesting to know whether the traditional financial sector is aiming towards cooperation or competition with the different types of institutions. In any kind, I think it would be a mistake not to value properly the technological capabilities of the traditional banking sector. In fact, in a document of Professor González Páramo at the Royal Academy of Science and Politics, he said that since 1997, there's been a very close relationship between the financial sector. Published recently, and that over the last 10 years, more information has been recorded than in the whole history of humanity. And that basically shows us the challenge of the financial sector and of the society as a whole. In the presentations we'll have the pleasure of listening to over the next few minutes, we'll talk about the currencies, or maybe Libra, the Facebook currency issued, or maybe even more than a coin. It will be focused and it'll be based on blockchain and general ledgers. Millennials and some financial services have adapted really well to this new environment in which digital transformation is having such an impact. But it's also been mentioned today that we'll see that there are advantages, but also important risks. Obviously, the digital gap is a risk that we have to try and overcome. And then there is also the reduction of critical thinking by users of financial services. That could also be a risk. Just like in sustainable finance with the 2030 agenda and the SDGs, it was stated that no one must be left behind. And I think that this is also important for digital transformation. And no one has to be left behind in this fourth industrial revolution that is taking place at the moment. So in this context, what is the role of inclusion and financial education? In order to have financial stability, as Mr. Fernando Tejada said, I think that it's key as well as for the protection of consumers and users of financial services. Obviously, everything will have to be transformed, and I think that the discussion about where financial education should head to will be discussed in this roundtable. There is one specific issue that makes me a bit uncomfortable. It will be discussed tomorrow. It's artificial intelligence, machine learning, and everything that has to do with data processing based on algorithms. More specifically, customized or personalized financial advisory services that are regulated by MiFID 2 in this case, which is the most recent regulation. And I think that users should have the right, and this is maybe something that we should take into consideration. I think users should have the right to know that they're talking to a machine. It's not the same when we talk to another human than when we talk to a machine. And I think users should be aware of that. I would also like to mention the role of financial psychology. It was mentioned this morning by Richard Saylor was mentioned, as well as Mr. Kandeman a few years earlier in the year 2002, a psychologist who received the Nobel Prize for economics. And they talk about the risks or the problems after bad decisions are made, bearing in mind the information provided and the environment for this decision making. In my opinion, and in the opinion of the EduFin project that I represent, we really believe that both inherent risks and the money flows associated to all of that have not changed due to digital transformation. We share that opinion. The methodological plan focused on decision making despite digital transformation is still alive and kicking, we could say. And you could say that it would be too simplistic to transform to talk about digital transformation and link it to financial inclusion. But if financial decisions are not made with a proper basis of knowledge and competences, financial inclusion will be fictitious rather than real. So, having said that, I would like to briefly introduce the three speakers, and I'll give them the floor. So first of all, we're not going to read the CVs. They are available at the website. So first, Maria de Mertzis, Joint Director of Bruegel. I didn't know her personally, but I did know some of the work she had done. So I'm really, really happy to meet you personally. After that, we'll have Blanca Narváez. She's the Managing Director of the Foundation Junior Achievement Spain. I would like to highlight the fact that she tries to promote young people's talent based on two principles that I share: accountability and freedom. And thirdly, Ryan Swift, Vice President of Financial Education at EduFin. First of all, they talk and they collaborate with over 150 institutions in the US in order to improve the financial capabilities of consumers, employees, and children. And so it'll be very in line with what Blanca is going to say, and it is going to be very interesting, which is to hear about youngsters. So, Maria, I give you the floor. Thank you.
Kind words, and I'm delighted to be here. I am a very big ambassador of financial literacy. I try to promote it in as much as I can, even though I'm not directly involved in any research on the issue. I have followed financial literacy for over 20 years because I am a firm believer that it is an important skill to have. And recently, let's say the past 5-6 years, my interest in financial literacy was reinvigorated by one observation, and that is that the financial crisis was one that had financial imbalances very much at the heart of it. And it struck me how the ability to use financial literacy as an instrument to try and prevent future financial crises was never really thought of. And I think that from the macro perspective, macroeconomic perspective, the financial literacy can be a very important tool, and it's important that we bring that into the discussion. So what I would like to do today is I would like to do two things. I'd like to show you some numbers why I think financial literacy is important, and then I will try and link that to the digital component and talk about the risks that arise. I won't talk about the opportunities. I'm going to take them for granted, and not only are they for granted, but there is only one way, and that is forward when it comes to digital and digitization. So there are a number of opportunities that we try to explore, and they're inevitable. But there are risks there, and it's important that we become aware of what they are sooner rather than later. So let me first give you a picture of which you won't often see, because we don't talk about financial literacy in macro terms. We talk about financial literacy in micro terms. So what can we do for the individual, and what does financial literacy do for the individual? What I like to say, and I like to show you some pictures in terms of what financial literacy can do for the system. Is my motivation comes from the system? Does the system become more robust if financial literacy is promoted? And I'm going to try and show you that it does. With some very simple pictures, I plot here the financial literacy is on the horizontal axis. This is the world numbers, based on the World Bank indicators. And on the vertical axis, I have a simple measure of welfare, of well-being, which is in economic terms is typically the GDP per capita. It could be other things as well, and we can talk about that as well. But for the moment, I'm just going to give you the most plain vanilla measure of welfare, which is the GDP per capita. Now, the blue dots, they are of the richer countries, and the orange dots, they are the poorer countries, separated by the median. So those above and those below, and you see interesting things. When it comes to the developed world, if I may call it this way, so those above the average, financial literacy really is a very strong correlator. Now, it's important to understand that this graph does not tell you what causes what, and I actually believe that the two go hand in hand. So richer countries tend to have better financial literacy scores, and those who have better financial literacy scores tend to do better in terms of systemic well-being. But my point here is that they go hand in hand, and it's important to appreciate that they do. Now, perhaps a little bit less satisfactorily, this relationship, to the extent that it exists, is less strong in the top and bottom half. Now, I think, and I have really struggled with this result. Is it really true? Is it true that financial literacy is not really a relevant indicator for well-being? And you know, I think that the answer is no, and in fact, the literature will tell you that it is. But there are intermediate steps in there, including financial inclusion, that come in the way, that need to be addressed before financial literacy can be thought of as an instrument, in the way that financial literacy can be thought as an instrument in the richer world. However, not only is it good for averages, it's also good for variances. And I think that's an important thing that we forget a lot in macroeconomics. We talk a lot about doing better, but we don't often talk about doing better for all. And I think the financial crisis, the process of globalization, and probably its reversal of globalization is driven very much about this inattention to variances, inattention to distribution of outcomes. Who is doing better? Is it for all? Is it inclusive? And what happens to social cohesion? And I think that social cohesion is going to be a key variable to look after, certainly in Europe in the next 5 years as we're getting into the new leadership, but also worldwide. It's not just about doing better, it's about doing better for most of us, so social inclusion. And here, financial literacy also has a role to play, and these graphs you won't have seen before, simply because we don't do this. We don't draw these graphs, and I think we should draw these graphs. I've now taken the data for Europe, and I've relied on measures that we have in Europe about social cohesion, simply because the data is better, and of course I come from Europe, as it were, where I'm trying to promote financial literacy in Europe. I plot here the Gini index. Big numbers of Gini tell you that you have great levels of inequality, small numbers of the Gini are better. And actually you do see here again, again a correlation, I'm talking only about correlations here, you do see that those who are more socially cohesive are also tend to do better in financial literacy, and the other way around, those that do better in financial literacy tend to have societies that are in economic terms more cohesive. And I think that's an important thing because, you know, if you promote financial literacy, you will do better and you will include more. And I have a number of other variables basically tell the story. The European Commission has started a process of monitoring imbalances in Europe, in the 28 members. It's a preventive process, so we monitor numbers and we're looking for early signals, early indicators to tell us if imbalances are building up in certain aspects of the economy. They're also doing that for social things, and they're trying to see whether there are important indicators that are flashing that point to basically social trouble coming along. And there are indicators like the risk of poverty or severe material deprivation. They're defined in very specific terms in the European Commission's website. And again, I plot those with financial literacy, and again you see that the two correlate. They're, you know, the societies that are cohesive in those specific terms do better in financial literacy, and the other way around. You will get less probability of being socially deprived, materially deprived. The risk of poverty will be lower for those countries that do better in terms of financial literacy. And I have one more graph in this context, which tell you the same story. That's the social mobility. It's actually the inverse of social mobility here. So again, the correlation is the correct correlation. So I mean, I don't need any convincing. I actually don't think you need any convincing that financial literacy is an important variable. It's a tool that should be used as such in the context of promoting robustness in social and economic systems. And therefore, I think it's not just the education parts of our policymakers that need to think about it. It's also the economic parts of our policy systems that need to think about how to promote best practice in financial literacy, and at what level, perhaps in all levels. So I think I use these graphs because they're important in telling, in bringing the issue to the attention of the policymakers, who probably otherwise wouldn't be alert to the idea that financial literacy is an instrument at our disposal, and therefore, even though I agree with what Raymond said in the previous session, that it cannot be done at the global level, it has to be done at the specific level, it does need some sort of nudging from Europe and probably global institutions. So then this issue is only going to become more important as digitization improves. So I think the access to finance and indeed financial services, it's not just about fintech, all services will become more digital. So it's actually quite difficult in my view to distinguish what is digital and what isn't. I mean, all financial services at some point will be digital. Fintech is probably a component of this. But I think that even the traditional financial sector, in all senses of the word, will become increasingly digital. So, you know, how do we use our skills to access financial services, and what does it mean when those financial services become digital will become a crucial question, and as we move forward, even more so. So I want to just throw three ideas that I was sort of looking at. I haven't had an opportunity to do this systematically, but it is something that we certainly need to do. But over the past 2 years, I have been reading a lot about fintech, about cryptocurrencies, about all the new technologies from the Bitcoin to the distributive ledgers. What are they? What do they do better? What do they do worse? And what are the hidden risks? Because that's really what it is. It's about risks that we haven't seen before, and what do they mean, and what are they going to be? What are they going to imply for the individual, but also for systemic issues? José María talked about financial stability. I think that's also crucial from the policy perspective. And here I'm just going to show you this is the price of the Bitcoin. Since its inception, and what you see on the vertical axis is dollars per Bitcoin in thousands. So it started with very little, and it went all the way up to more than $18,000 per Bitcoin. This is daily data, down to let's say below 4,000, and now it's somewhere between $9,000 and $10,000 per Bitcoin. I actually, in a different paper, when I was trying to understand whether the Bitcoin is a good challenge for currencies, and we can talk about this if you like in the discussion, I won't talk about it now, I plotted the inflation rate, which is basically the change of this price. And you can imagine that the inflation rate of this is actually not very good. In fact, it's comparable to the inflation rates in Venezuela. So they're not very good in terms of promoting price and financial stability. But what's interesting about this is, and this is a piece of information, you can see it on the text at the top of this slide, the Department of Education at the US did a little study, and perhaps you can confirm this, Rhyne, in which they had actually found, they interviewed students in the US. Typically, US students require loans to study. 20% of the students asked had used their loans to purchase Bitcoins. And that's a lot of students. and you know, if you see this graph, that statement is equivalent to saying, in my interpretation, that 20% of the students had used their loans to gamble, effectively to gamble. And of course, you know, students are not allowed to gamble. There are probably firewalls that prevent you from gambling, but they're not similar firewalls prevent you from investing in Bitcoins. And you know, if you have an asset that is quite so volatile, you can actually see that there will be trouble. There will be students that will be delinquent. The probability of students that will be delinquent is very big. And in fact, the Department of Education was very worried that these youngsters that have the ability to buy Bitcoins haven't actually thought this through. Those youngsters don't buy, let's say, stocks in the stock market because there's regulation that stops them from doing that. But they do buy Bitcoins, and you know, all these graphs tell you is this is a very unsafe asset. And if you're going to invest in a very unsafe asset, you really need to know what you're doing. So I think here is a risk, and you know, what do we do about that? Do we need to do something about that? Or I mean, you know, these are adults; they know how to invest, and they need to. Do they need to be protected? And is financial education part of that process? I'm very encouraged by US universities that are now offering, I don't know if this is across the US, but in some universities they're offering financial education classes. Well, these financial education classes, apart from the three questions that Raymond asked us before, they're also been talking about investing cautiously and wisely. So here is a real risk. You know, in the US where student loans are important, that you cannot study with a student loan, what does that mean about you know, the future of these youngsters that are effectively gambling? I think that's an important risk to think about. The second thing that I'd like to talk about is actually a fascinating study that most of you will be familiar with the work of Anna Maria Luzardi in the Global Financial Literacy Center in Washington. And they recently published a report, this is now maybe a year old, where they had done the following experiment. They had asked the question as to whether those who use digital payment systems, primarily the phone, are financially literate. So they wanted to find out whether they are capable of actually using a very good service, they're capable of backing up their decisions with financial education at the background. And actually they found, and here let me read you the text, that this report that they published, they show that millennials, this survey was done on millennials because they're the ones who typically use this new technology. Millennials who use mobile payments are at a greater risk of experiencing financial distress and engaging in financial mismanagement. Now, what that means is the following: those who use mobile payments, in concrete terms, are nearly 16 percentage points more likely, by comparison to those who do not use mobile statements, to overdraw on their checking account, and 23% more likely to turn to alternative financial services. And the director of this institute concludes that those who use mobile payments show low levels of financial literacy and worse financial management practices than non-users. Now, this is counterintuitive, at least at first instance. You would have thought that those who are capable of actually using mobile phones to do what some of us might think are sort of complicated transactions, they will have also the financial knowledge, the savviness to do that. And what this study is telling us is that they don't. And if anything, this goes the other way around. They're very careful not to establish any causality here, but I think the message that this is telling us, and this is, I think, an important message as we move forward, is that digital savviness is not financial savviness, and one cannot be replacing the other. I think this is a very important message that by reducing the threshold with which the easiness with which we can use financial services, we might be running into important risks. And I think that's an important message as we design financial services at the digital platforms. It's important to think that maybe we shouldn't make it as easy to use because people need the time to assess the transaction that they're doing. And I think that's a very important message. And that brings me to Libra, because I think that's one of the biggest, I don't know if you had the opportunity to read the white paper of the Libra Foundation, one of the biggest aims of the Libra is to improve what they call the customer experience. That means that they want to make it very easy. At the touch of a button, it says on the white paper, at the touch of a button, you would be able to do payments. You would be able to do this. Interestingly, this is a very different thing to the Bitcoin. Now, while I said that those students in the US were very free to buy Bitcoins, actually buying a Bitcoin is not such an easy thing. You really need to know what you're doing. You have to go and register with a wallet, a digital wallet, and you have to make a transaction, and then you have to buy the coin. It's not actually quite as easy. So when it comes to the user experience, the Bitcoin experience is not a very friendly one. Libra wants to liberate the user from this. They want to make it extremely easy. You're going to have a Facebook account. You can pay just by a touch of a button. Now, if you believe the message that digital savviness is not financial savviness, this can be dangerous, I think. And here is a graph of the Facebook users. These are in areas across the world. We're talking, upwards of 2 billion people that now have Facebook accounts. Just by means of a comparison, there are 7.1 million owners of Bitcoin, right? And here we're talking about above 2 billion people that are potential, because the Libra hasn't been launched yet. They're potential users of a very, very easy and customer-friendly experience on the payment systems, right? I mean, if you think about the results of the previous study, what does that mean? I'm going to run into troubles. And in fact, the other big ambition of Libra is to provide means of payments for those that don't have bank accounts. And I think that's an important message here. And I think that's also a very noble message. Through the provision of smartphones, as we heard in the previous session as well, you can actually increase financial inclusion. So there are wonderful results that do show that this provision of digital services on a phone, on a smartphone, has really enabled poorer parts of the world and has really helped them to be more financially included. So I think there are good messages there. However, financial literacy comes again into the picture. And I've tried to find innovative ways of demonstrating the argument that I'm trying to convince, that namely financial literacy, it's a problem. You need to provide financial literacy skills in order to be able to actually use digital technology. So what I've plotted here is financial literacy score is on the vertical axis, and on the horizontal axis is a proxy for financial needs. How many people are those who need to send money abroad but they don't have an account? So I've devised a little way of measuring that. So as you go from the left to the right, your financial needs are actually increasing. And what you see here is you see a cloud of countries, but actually the ones on the left, so they are those who typically have bank accounts, countries that almost everybody has bank accounts, and those who are on the right-hand side of this vertical line, they're typically the unbanked. So they are the ones that Libra will be trying to entice, because they are the ones who really need that, as they don't have any other alternative. Unfortunately, those are also the ones that have got the least financial literacy education. So, by induction, if you believe what previous studies have told us, they are also the ones that are more financially vulnerable to the experience. So if you have a very easy experience in terms of paying, you may actually run into similar problems as those millennials in the US study. So I think these are risks that all of us need to examine a lot more systematically, try and understand exactly what it is. The Libra itself is something that has not being crystallized yet. We can talk about various aspects of it if you're interested in it. But I think what's important is to understand that there are hidden risks there, and financial literacy is a tool, is a weapon actually, that we need to promote as much as we can, and that is across the whole world for financial inclusion purposes, but also for robustifying the systems and avoiding financial instability issues. I'll stop here and I'll be delighted to engage in discussion.
Muchas gracias, María. Veo que son.
Thank you so much, Maria. I realize that there's plenty of risks and they're quite big challenges, but we will talk about what we can do from the point of view of financial education. We'll talk about how to address this and also the potential actions that policymakers might take. All right, Blanca, whenever you're ready, you have the floor. Thank you very much. Good afternoon, everyone. I'd like to thank you for this opportunity right after lunch. It's hard to pay attention right after lunch. I'm the manager of the Junior Achievement Foundation in Spain. And for those of you who don't know this foundation, it is an international organization. We're in over 120 countries. We speak 30 different languages, and we've been around for over 100 years. And our mission is to inspire young people so they achieve their goals in a global economy. What does this mean? This means that we want to provide young people with experience, young people between 7 and 30 years old, experiences in terms of entrepreneurship, in terms of initiation in the job market, and also particularly important in terms of financial education, which is key to achieve personal and professional goals. In the Junior Achievement Foundation, we have been working in Spain since 2001, and we are an organization that is present across the entire Spanish territory. We train 42,000 students. We work with over 2,300 volunteers every single year. So what we do is develop training programs to generate those experiences, usually coming from professional volunteers that go to classrooms. Financial education in Spain lives in a context in which within the curriculum, within the plan of study in schools, financial education is not really included as a compulsory course, as an elective course. We felt the need to try and explain what financial education is for all players involved, for parents, for teachers, for institutions, for society overall. And in that regard, we wanted to develop and design a curriculum that could point out to teachers and parents what type of financial education children and teenagers should be receiving, at what age and why. And in order to do that, we conducted a study and we analyzed the usage that children make of economy, what age they are, and then what needs they think they have, to try to identify the main features across the population. But we also wanted to identify the triggers, the characteristics that make some skill or some habit to either develop or hinder at a specific age. So we conducted this study all over Spain, particularly in Madrid, but we also wanted to see if the geographical location had something to do, or if the family conditions had something to do with the study too. The initial block of questions were related to whether children and teenagers run errands for parents. Initial interventions into the economy. 36% of children under 12 run errands independently. And it was actually quite surprising to realize that 32% of women run errands and 41% of men run errands. So there's a gap, a gender gap that parents are generating in those kids. We send boys before girls to run these errands, and boys do that a year before girls. So maybe that determines the gender issue in the financial problem. But it also struck our attention that some cognitive abilities are not being a determining factor for children to run errands independently. That non-cognitive skill that I'm talking about is particularly the capacity that children have. It is measuring the number of questions that they don't answer, basically. A few years ago, it was proven that the number of questions that a teenager doesn't answer in a survey can predict not just the salary that they are going to make in the future, but also the educational level that they're going to reach. And in that regard, it was very interesting to try and identify how kids that didn't answer that many questions were less likely to run errands independently. For every question, they had a 7.7% less probability of going to run errands by themselves. So there's a connection between the level of cognitive skills of teenagers and children and their responsibility in financial matters in the household, meaning reliability that parents were given to their kids when running errands. Also, if they get a monthly stipend, was another question. 50% of elementary school kids receive a stipend. And they start receiving this stipend between 7 and 8 years old. Again, we found some determining conditions that indicate if there's a higher probability to receive a stipend or not. The older you are, the more likely it is that you will receive a stipend from your parents, but also the number of questions that you leave unanswered also predicts if you're going to receive a stipend or not. If parents trust their kids and rely on that kid to give them a stipend, is very connected to whether they can accomplish the tasks that they are expected to accomplish. The third block of questions had to do with forecasting, if they can save. 6 years old is the age at which children start saving. It is related to a different type of saving because parents tell them to start saving. It's not really the kid's idea, but they start thinking about saving once they turn 6. And this is very interesting. There is a very clear correlation, very solid correlation between non-cognitive skills and the likelihood to have an attitude that forecasts what's going to happen in the future. Not answering some questions that will predict whether or not they will make good saving decisions in the future, in the long term, is also related to their likelihood of repeating a course in school, repeating a grade. So again, non-cognitive skills determine this. And also we ask them if their parents talk to them about the importance of savings and how important it is for the future. 44% of children say that yes, their parents do talk to them, but they talk to boys more than girls. 39% of women have these conversations with their parents, of girls under 12 years old, and 48% of boys have these conversations with their parents. The fourth block of questions was about how much they compare. If when they have to make a purchase, if they go through that critical thinking process of comparing different products in other stores or through the internet. This question is related to the previous question about forecasting, and it has to do with the capacity to self-regulate, self-control. If I can control and prevent myself from buying something, and I can actually save that money. Or if I can't, if I'm much more impulsive and I'm going to spend the money that I have. Again, the number of questions that were not answered can predict the capacity that children have to control their impulses. The more questions are answered, the least they restrict themselves from buying things. The fifth block was about whether they have a cell phone, and then we start connecting to technology. 20% of children of 6 years old declare that they have a cell phone. 20% of 6-year-olds. Those kids increases, and it reaches 52% when they're 12 years old. And 100% in Spain say they do have a cell phone when they're 18. So the connection with technology it is full in this country, but 65% of these children under 12 do not know if their cell phone contract is a prepaid contract or if it's a full contract. So we really see that is not balanced out. The capacity that they have to access technology, to buy technology, and to make financial decisions is not aligned with the responsibility that it entails. We see that technology is very convenient, but it's also motivating immediate things. You can buy at any time, any place, right now, immediately, any day of the week, at any given time. Therefore, purchase behavior is much more impulsive and much more compulsive, as opposed to a responsible behavior. So this imbalance that we see in terms of using technology, using cell phones, is starting to become a concern. We can see how all these non-cognitive skills that we were mentioning in the beginning about running errands starts to have much stronger impact when kids actually get a cell phone. In the sixth block of questions, we ask them if they have access to the internet and if they purchase through the internet. 5.3% of children under 12 years old, meaning those that have phone, buy on the internet. Again, out of that 5.3%, 8% are boys and 4% are women, and 2.4% are women. There's a 43% of people that buy on the internet, of 18 years old, that buy on the internet. Once they turn 18, these figures are not that significant, but we think it's very important to tell the difference between primary, elementary school, and high school. The average age to buy on the internet when you're in elementary school is 8 years old, and in high school is 14 years old. And we'll say, okay, well, something is not adding up. It's 14 when you're in high school, but 8 when you're in elementary school. What happens is that the age is going down. They purchase through the internet sooner and sooner. When they become adults, the percentages for elementary school are 12% in internet purchases and 21% in high school. This internet shopping has to do also with whether they have a credit card or a debit card. They have to use a credit card or a debit card to do those purchases. Going back to that 5.3% of children under 12 that buy on the internet, that seems like an excessive percentage, but we start to realize that these kids are doing transactions through the internet with payment methods that would allow them to be anonymous and do any type of transaction. There's no longer that barrier. They can buy alcohol, they can buy whatever they want. Things that usually, due to their ages, they will not be able to do. So anyway, this entire study led us to come up with a syllabus of financial education in which cognitive abilities are one of the main things. Young people need to be able to control themselves. They need to be able to stop being impulsive. It's key that they control these impulses. And we need to start the sooner the better. They start doing economic transactions when they're 6 years old. So we need to start teaching them financial education when they're 6 years old. And of course, cognitive abilities are really important. So the question now is, okay, non-cognitive skills are essential, but how can we develop them? In the Junior Achievement Foundation, we develop training programs ranging from elementary school till college. I forgot to keep moving on with the slides. The slides are very brief, so you didn't actually miss out on anything. These training programs always have to do with experiences. We wanted to know if they were actually working on these non-cognitive skills. We've been doing an impact study for the last 4 years. We check if our students are improving in the main pillars, in entrepreneurship education, in job market education, and of course in financial education, but particularly on those skills that are the basis for human behavior. And they come from very prestigious studies. By the way, BBVA is also promoting through really amazing videos this type of mindset. They explain theories such as Walter Mitchell's theories or other concepts that I've already mentioned regarding perseverance. I'm going to give you a very concrete example. We do a project with the Spanish Association of Banking once we had this syllabus, what we did was start proposing different schools the types of financial education that students are going to need. And we make sure that they are aligned with the improvement of these abilities and these non-cognitive skills. So our project is called Finance Your Future. It's a project that we do with BBVA and with the Spanish Association of Banking. There's plenty of volunteers working too. And it is a financial education program, very short program, and you would think that it's not really that relevant, that it doesn't really have an impact, that it's a very funny experience in the classroom. We talk about how to have a personal budget. We talk about responsible consumption. We talk about comparing products. And we also talk about the dangers of the internet, which are really social networks, but how these threats can also have an impact on their behavior regarding finances. And it is very surprising for the audience in general, but not for us, because we know that our programs work on these cognitive skills, non-cognitive skills. We see that they can improve by 36% compared to kids that are not undergoing this program. They can leave for later what they want to do now. They can control these impulses about buying and satisfy their needs immediately, compulsively. They are able to improve by 36%, but they also improve in terms of perseverance, 45% in perseverance, and how these abilities are correlated to, not missing class, to their educational experience. When they do this program, they decide to do this program, and therefore they decide to continue studying. 45% more of children decide to continue studying, and this also has an effect on academic performance because, again, non-cognitive skills affect human behavior. So if I'm able to leave for later what I want to do now, and therefore buy with a critical mindset something that I don't need right now, I'm also able to study when I don't feel like it, to go to class when I don't feel like it, so it has an impact across all levels. These non-cognitive skills that affect savings and purchasing decisions and financial education and financial behavior specifically are improving the set of the decision-making processes that we go through in life. So as the OECD says, financial education is also contributing to the future personal welfare of all young people that receive financial education. And I think that's it. Thank you, Blanca. Let's move on to the last one of the initial interventions. So whenever you're ready, Ryan.
And great stuff from Blanca and Maria as well. I was jotting notes down. Tough acts to follow. I think we don't have that much time left though, right, Jose?
12 minutes.
Okay, so I'm going to try to go quick so we can have some time for questions. I think that what I'll try to do is just share a little bit about EverFi's approach to financial education and how we've leveraged technology in a way to engage young people and adult consumers in the U.S. market. First of all, I do want to say thank you to Lydia and the team from BBVA for inviting me to participate today. Our whole business is built on digital financial education. So when the call came through, I literally jumped at the opportunity to come here and participate. At EverFi, we built our company on digital financial education. It's our passion. We live it, we breathe it, we sleep it, we wake up thinking about it all day long. And as much as we wish that everyone else shared that same passion, it's really exciting to be here today, to be surrounded by folks that do, which is not a normal thing for us. So it's a great opportunity for us to be here. At EverFi, let me see, how does this thing work? Let's go like that. So we are a Washington, D.C. based education technology company, and we founded EverFi about 11 years ago with the big idea to use technology to bring financial education to life for young people in the United States. At that point, in 2008, there was the great global recession going on, so it was actually good timing for us. But we looked around the market in the US and recognized that nobody was effectively teaching high school age students about personal finance. We thought that was a tremendous tragedy and realized that we had an incredible opportunity to make a difference. So when we dove into the market, we noticed that what did exist was kind of scattered, a little bit here, a little bit there. Much of it was old school or very traditional in its methodology. Maybe a bank volunteering an hour for, in the US we have Teach Children to Save Day. I think one of the earlier panelists talk about the Finance Week that they have in Europe here, but Teach Children to Save Day for an hour is an excellent program. It's well-intentioned, but it simply falls short to adequately prepare high school kids to go off to the real world, and whether they go to university, join the working world or the military, they are woefully unprepared to make important financial decisions that the consequences will last a lifetime. And so as we dug in and saw that much of this was old school, we realized that we were failing these kids by not meeting them where they are. I think one of the earlier panelists as well talked about digital natives. And at EverFi, we believe wholeheartedly in using technology to engage these very tech-savvy digital natives on important financial concepts. And Maria made a great point earlier about, tech savviness does not equate to financial savviness, and we agree wholeheartedly. But the reality is that these kids, this next generation of consumers, clients, friends, neighbors, are very tech savvy. And so we set out to use technology and to build a learning platform that would better prepare these kids to make important financial decisions. So put simply, we have made and created digital learning platforms that are very interactive in nature. So it's not just pressing play on a video and allowing a student to watch. It's a personalized learning experience so that the student is very much engaged throughout the process. We are trying to teach them the basics. It is important that it is embedded within a school day. So our students are learning the core concepts of financial education while they're sitting in the classroom. We realize that it's too much to ask that these kids would, on their own time, go out and try to learn about personal finance. As sexy and exciting as I think it is, most kids today don't agree. So we embed it as part of the school day, and we've made it very measurable for the students. So we wanted to bring scale through technology so that we could reach students regardless of zip code or where they are, regardless of their socioeconomic status. I was talking with someone earlier about the challenges even here in Spain. It's much easier to engage folks in the big cities like Madrid and Barcelona and others, but reaching out to folks in the smaller villages and towns throughout the country is sometimes difficult, whether that's for a nonprofit or a bank like BBVA and others. We believe that technology can democratize that process and bring some equality to that. In the States, our system of education is not very equal. If you live in a wealthy town or community, your kids get to go to really good schools, and unfortunately, if you're born into a lower income community, your kids are going to go to schools that aren't as good. And so we recognize that there's inequality there and believe that through technology we can level that playing field. That's pretty important to us as well. So if we fast forward to today, 11 years later, we've built technology for elementary school students, middle school students, high school, university, and adult consumers and clients. Our business model is pretty unique. We partner with financial institutions. As Jose mentioned earlier, we work with about 850 financial institutions in the States who care about financial education, care about their communities, and want to help by bringing scale and measurement to this process. The big problem in the States is that we don't require it. So many folks up here on stage today have talked about the public sector's role and where that comes in. And while the effort is there and there's good intentions in the United States, it just doesn't equate to good results. What that means is there's only 6 states, I believe right now, in the US that require financial education for high school students before they graduate. So they have a standalone sort of one credit class. And again, that's woefully falling short. We're failing these kids. What does happen, though, is that the state legislature will say, hey, financial education is important for all the reasons that everyone has said today. And we want to teach our kids these concepts, but we don't have any money to give you. We have no funding to support it. And so the local schools and towns and districts are left to scramble and figure out, well, how do we get these kids the knowledge they have? And so enter EverFi there to partner with the private sector, 850 financial institutions who fund our technology so that it can be brought to the districts and taxpayers that they care about at no charge. So we've really brought scale and measurement to this. We had 2 million students last year alone throughout the US go through our technology on behalf of our 850 partners. We do much more than that, and we focus much of our time with our partnership with BBVA on adult consumer learning and partnerships with NGOs and nonprofits across their footprint, and happy to talk about that at length, but I figure I'll kind of stop here and leave us a few minutes for questions, if we have it.
If you want to continue, a couple of minutes.
Let me see, I don't even know what I have left here.
A couple.
Oh, wrong way. Let's see. Sure, I can go a little bit deeper into the work we do. So our technology, actually, you know what? The gentleman from Colombia, the journalist from Colombia who asked the question in the last group, really talked about how do you bring access to communities that aren't very digital savvy or technical savvy in some of the smaller villages in Colombia. And at EverFi, we've long believed that the mobile phone, the smartphone that we all have in our pockets now, can be the great equalizer there as well. And so the United States, and we talk a lot about being one of the wealthiest countries in the world and all of these great things, still has incredible income inequality. And we have communities that are underserved and under-resourced. And through our technology, we've been able to, with the mobile device, engage folks that otherwise might be under or unbanked. Might not have access to great products and services, might not have access to good education or coaching. The smartphone that I have in my pocket, and that the vast majority of folks, I think the gentleman up on stage mentioned the research in Africa that shows that even in some of these developing countries, while they're not wired the way that some of the European and more modern countries are, like the States, almost everyone has a smartphone now, and this becomes a great equalizer. And through our partnership with BBVA and others, we're able to reach these folks where they are, not requiring them to come in or sit through a seminar, but to go through personalized educational experiences at their own pace and how they want to do it. And so we've tried to return power to the consumer and to the student and teacher in the United States through great partnerships like the one we have with BBVA. So I'll stop there. I want to leave time for everyone else to ask questions of the panel. So,
muchas gracias, Ryan.
Thank you very much, Ryan. Let's quickly begin with the second round. We have 10 minutes. We've actually talked about very interesting topics. We could spend hours talking about these things, 10 hours, 10 days instead of 10 minutes. So I'd like to point out some of the main points that you highlighted in your interventions. So you can maybe talk a little bit more about those points, or if you can add whatever you want. Let's start with Maria. I think it was very shocking what you said about loans for students that invest in Bitcoins. In Spain, luckily, we don't have that problem that the US has. Ryan, I'm sure you know about that too. As for Libra, in my initial intervention, I was talking about financial stability as a legal service that is good. And I think that with Libra, with those 3 billion users, risks might be systemic, and we'll see what happens. So I'd like to know your opinion, Maria's opinion about that. What can public authorities do can this be figured out through regulation? And also, from the point of view of financial abilities that citizens should have, what we would need to mitigate these risks? I'm going to say all the questions together, and then you can answer them. I'll go one by one. Blanca, that control of impulses that we were talking about, it even happens in terms of saving for retirement. So in the case of young people, it's even more concerning because they're much more vulnerable. Could you say something more about that? The idea of sacrifice now to get a return or a benefit in the future is interesting. Self-regulation, I think that's a very, very interesting concept. How can we make that fit among young people? How can we combine regulation and self-control? And that leads me to what Rhyne was saying. You're very optimistic about technology. You believe that technology might drive democratization, equality. I believe so too. I think that you talked about many of the risks, but I think we should focus on the positive side of digital transformation. I'd also like to highlight what you mentioned about smartphones and mobile devices. They have a lot of potential, just like you said. And also, for Rhyne, what do you think? I mean, you think that technology is something that we should build on, but technology is also the means to provide financial education. So those two things, analysis and that double approach, are interesting to take into account. So let's start with Maria first.
On the Libra, I mean, I think that Mark Carney, who is the governor of the Bank of England, issued a statement the other day saying that the Libra has the potential of becoming systemic the day that is launched. So that's going to be in a year from now, and because of the scale of that graph of the potential users of Libra are really in the billions at this point. So, you know, if everybody who has a Facebook account opts for a Libra, they can do it immediately, and therefore you're going to have Libra users of the scale that Facebook promises. So let's see if we can sort of try and disentangle a little bit the different things that we should worry and should not worry about. The Libra is a cryptocurrency. That's okay, that's fine. I mean, that's, you know, the Bitcoin, there's many others actually. There's not just the Bitcoin, or the Bitcoin is the bigger one, the biggest one in terms of volumes that's being used. It's important to understand whether these types of cryptocurrencies are really currencies in the way that the euro and the dollar are, or they are assets. They're sort of store values, right? And if they are assets, which I believe they are, then they need to be regulated as such. So if they are a security, there are security regulations. If they are different types of assets, derivatives, they should be regulated as derivatives. And I think particularly the US is advancing this, much more advanced in this thinking. They are regulating some of these cryptocurrencies as particular classes of assets, and then they fall under particular regulation, which means that we have consumer protection under the particular umbrella of regulation. However, if you think of them also as currency, and by currency I mean it's a means of payment. So, you know, I go to the shop and I buy with Libras a certain thing. Then, of course, there is an element of systemicness that needs different types of protection than otherwise. Now, is Libra a currency? Well, I think that it is less of an issue for the developed worlds, but it is more of an issue in the developing world where you have very unstable currencies, and therefore, you know, you might have the citizens that actually opt out to use other currencies that are more stable. Now, I show you a graph of the Bitcoin, and if anything, that graph shows you that the Bitcoin is not stable. So it's not a good means of payment. If one Bitcoin costs $1,000, the next day it costs $2,000. It's not a good means of payments if it's as unstable as that. The Libra wants to solve that problem. It actually it starts very much from the thinking the Bitcoin hasn't been really a very good means of payment. I'm going to provide you a better one. And how do they do that? Well, what they're going to do is they're going to design something which is equivalent, for those of you who know the literature, called a currency board. So what they're going to do is basically they're going to buy a basket of currencies chosen with the principle of being stable, And for every Libra that is minted, for every Libra that is printed, minted in the context of the digital currencies, they will have the equivalent backup in safe currencies. So in order to print 1 Libra, they have to buy the underlying currencies. That's a currency peg, effectively. They will not mint, so the white paper argues, they will not mint a Libra unless they buy the currencies. Now, that is a good thing if stability of the value of the currencies is what you had in mind. I think that's a very good thing. Then you know that this is going to be a relatively stable currency, which is going to preserve the quality of the currency. So you can use it because it will be a very stable one. It's not entirely clear how they're going to do that, and the foundation that is they call the association, actually the Libra Association that's going to do that, we need to understand their motives, and that's not clear. They have not launched it yet. They have not said how they're going to do this and why they would do something like that. So in other words, what is their business model behind that? They talk a little bit about how they're going to make money. Even though they're registered as a non-profit in Switzerland, I think there is a business model behind. They will take the money you pay, they will invest it in safe asset, and that's going to be the return for the investors. So if that is true, then they will not be able to mint Libras as fast as possibly demand. I mean, if you saw again on the Bitcoin, the demand for the Bitcoin, the price of the Bitcoin is totally driven by demand because the supply it follows an exogenous formula. So they cannot stabilize the Bitcoin. If there is a great demand for Libra, simply because it has got that scale, then they're going to have to mint. They're going to have to mint Libras in order to stabilize the value of the Libra. But in order to mint it, they have to buy the underlying assets. And that's going to become an expensive business at some point. In particular because the ambition is to use the Libra in the developed world. So if you are in some sort of an African country, you pay with a local currency to buy Libras, then these currencies need to be transformed into the underlying basket in order to be able to mint the Libra. So there, I think, I see there is an inconsistency in my view in the way that they are designing this. What's interesting, actually, it's very clever that they just announced that they're going to do this without actually doing it. So they've given a buffer of about a year so that the global community engages in identifying the bugs. So come whenever it is the date, they can effectively launch immediately Libra 2.0 rather than 1.0, with most of the bugs actually done. But I mean, I don't think it can become a global currency. I have written a paper in which I argue that cryptocurrencies are not good currencies because the currency has a sovereign at the back. It has got a country. It has got an elected country with checks and balances that monitor the value of the currency. They also have a country that is ready to provide extreme liquidity under financial crisis, what we've seen for the past 10 years. I can't see a private organization playing that role in a financial crisis situation. So they will not be minting Libras to stabilize anything. Why would they do that? So I don't actually believe that cryptocurrencies, and that includes the Libra, private issued currencies are good substitutes for national currencies, but they can be means of payment, and more stable they are, then the better they are, in the way that we can use barter. I mean, if you think about barter, barter is exactly this. It's like an agreement between the two of us to exchange a good for something. But if you want this to be globally used, then you have to provide some guarantees, which currently are provided by the sovereigns, by the Fed in the US, by the ECB here, and the taxpayers. And the taxpayers, who are the ultimate guarantor of the value of the money in your pocket, require a system of checks and balances, which requires basically elections and the rule of law. And I just don't see how a private organization can substitute the role of the sovereign in this respect. It plays a crucial role in currency. So while I do understand the systemicness, if you see the Libra as an asset, then you need to regulate it as an asset, and you need to just clarify what type of asset there is. I think Bitcoins in some countries is already, cryptocurrencies I think in the US are already, they are considered derivatives or not derivatives, well, there's the classes of assets that are regulated. The Libra, I think the thing about the Libra is the scale, the potential of the scale. And if it's going to be used immediately by many people, then we have to be a little bit careful in terms of not having masses of people engaging in a rather volatile asset. I think that's the issue. So we need to find ways of regulating that. I worry less about the currency issue, currency properties of the Libra.
Thank you. Blanca.
We need short answers. Moreover, if you want Q&A from the audience,
en un par de minutos.
Sí. Bueno, es un poco.
Well, the question that you asked about self-regulation, given that it's at the basis of human behavior and how this is related to financial education. I think financial education currently focuses on the content. What type of cards there are, credit, debit cards, how interest rate works. But hardly ever do we find spaces where non-cognitive skills or where skills that allow humans to do a well-known and responsible way of using those assets really takes place. So you talked about self-regulation and how that is of importance and how it acts with regulation. Basically, the regulation establishes that there are certain things that have to be guaranteed. Regulation protects individuals in certain situations and forces a specific type of behavior, whereas in self-regulation, this is something you decide yourself for yourself. So the greater the amount of regulation that allows for people through the behavioral economics knowledge that we have, the trend not to do anything, or the loss that you feel when you do not invest on something. For instance, if I receive my salary and it's 100, am I going to save 5 or 50? Well, I no longer have 100. Now I have either 95 or 50. So the employers themselves, by the decision of the, employees, by the decision of employees, can actually tell the employer to save money for them, and that can be used as self-regulation.
The question you asked, Jose, I think I'll kind of do 2 quick stories. Number one, if you think back 15, 20 years ago when MP3s first came out for music and Apple introduced the iPod, and that was revolutionary. A lot of folks don't know, but Sony Music had that technology first, and they sat on it. They crushed it because they didn't want it to cannibalize their own business. And so they foolishly didn't introduce technology to the folks that really wanted it because they thought it was going to hurt their business. And in the long run, it was a really bad decision. So I use that analogy to say that we believe that financial institutions really have to use technology to engage consumers and communities on financial education, or else they're truly missing the boat. If we're just going to send a banker to volunteer an hour here, an hour there, which is obviously great and well-intentioned, but if we're talking about high school students, a banker sits up for an hour, and a lot of high school students are just going to drone out and put their head on the desk and not fully be engaged. I think to Blanca's point, you have to have engaging content, you have to have engaging experiences, and I think if we're not going to meet these young people where they are, which is on technology, on their phones. I'm 46 years old, and I do pretty much everything on here now, and my parents do as well. And I might not be the best example there, but the reality is they are ubiquitous now, especially in the developed world, and they are also a great tool to engage folks in the developing world. So I think we have to use technology. I'm a little biased because I work at a technology company, but that's what I'll say. So.
Thank you. ¿Hay tiempo para...?
Sorry, they asked me to come onto the light. If there are any questions in the audience, we have time for 1, maybe 2. Yes, go ahead.
Hola, my name is Laura Cristina. I recently finished a master's in microfinance, and I'm really interested what Blanca was referring to about financial capabilities. Or rather non-cognitive skills, I correct myself, within financial education. I believe that this is one of the most important things, and that the financial system does not know how to measure it. It's difficult, and I've seen this in many cases when I talk about this, because I really like to talk about non-cognitive skills, about the 21st century skills. So in general, how can we measure in real terms how important non-cognitive skills are? How can we demonstrate that school curricula should focus not so much in content, but more in non-cognitive skills. How can we convince them? And how can financial capabilities transform to prevent financial crisis in the future?
Wow, es muy ambiciosa pregunta.
Very ambitious question. It's true that we have measured, our programs, we measure if our programs are generating changes in terms of knowledge, which is also part of what we teach on. But knowledge is accessible on the internet, so you could be informed about anything. What we do not have is spaces to generate those skills, which make that what you have learned in theory can actually be put into practice. I'm going to ask you, how many of you know how to make a budget? Raise your hand. How many of you really use the budget to make your decisions? Financial decisions, that is. Well, that's the issue. Knowing how to make a budget doesn't make you use it. Just because you know the theory doesn't mean you're going to do the practice. So the budget is the first topic of one of our courses. I asked many volunteers, and they've always answered the same. And they said, I'm going to do it. But I moved house. Don't do it. Don't look into your budget. But it is a challenge. It's a challenge to be able to measure things, to measure if our attitudes and behaviors are changing after such a short duration course, like in our case. We found a researcher, he's called Ildefonso Mendez, sorry, I correct myself. You can look him up on the internet. He's a doctor at the University of Murcia. And you can see in junior achievement, we have him referenced there. You can look for him there. And we looked at the capability to persevere, or how the maths scores went up. And that it was great to see. He said, I would like to know how my students are faring. So that if they are below average, or if there's a skill that one of the students in the classroom is below the average, I would like to be able to measure that, so that they can go up to average. Non-cognitive skills are cross-sectional. They're not just in one little topic, in one silo. So we are now developing a tool with him, so that just like we measure cognitive skills based on our programs, we can also measure non-cognitive skills without any type of program. Now we are developing surveys, questionnaires that allow educational centers to know what's the state of affairs of the skills of their students, in order to be able to intervene with a group or with individuals specifically on certain skills. And I think that this is very important, because theories, Walter Mitchell 20 years ago demonstrated that living for tomorrow, what I fancy doing today, is a predictor of success. Salary, it's either a vicious circle or a virtuous cycle. If you are able to live for tomorrow, what you can do today, something that you would like to do, is a life changer. So how come we are not changing that? How come we are not measuring that skill in school? How come we are not working on that scale at school? So this has to do with financial education, but with well-being as a whole. Well-being of people.
If there's any questions, are there any questions? Okay, we'll take that last question, okay? You're going to stay around later, maybe they can, yeah.
Hola, buenas tardes.
Good afternoon. It's a pleasure. I come from Colombia, from Clear Finance, and we work with financial rotation through gamification at schools. And my question for Rhyne. Rhyne, we've seen in Colombia that there are more mobile phones than actual people. Despite that, people are not motivated, or youngsters do not want to carry out virtual financial education courses. So they look at education and finance, and they're not interested. So with the virtual program that you have, how do you make students be motivated? Or are there any requirements for them to pass the course as well, or not?
That's whoa, hold on. That's a great question. To keep it really simple, our success in the United States with the younger students' population is really contingent upon our ability to implement it as part of the school day. Again, if we just rely on the students kind of getting their own motivation, it's not really going to happen. You know, you'll get some kids that will be self-motivated and say, hey, I really want to learn about this. But we're able to, through relationships that we build with the school districts and teachers all across the country, regardless of zip codes, state, socioeconomic status, we're able to implement the technology as part of the school day curriculum. So it becomes sort of a requirement that the students go through it. That being said, though, we do try to implement some incentives with our financial institution partners. So many times a bank partner that provides funding for our education will, at the end of the year, offer a scholarship for the student that the teacher selects as the top financial scholar for the year. And then they'll present it at the end of the year. And so there is kind of a carrot or an incentive at the end there. But we find that without the requirement of doing it in the school, the students, like you said, are pretty not very self-motivated in order to seek out this information and do it on their own. So it has to be done as part of the school day.
Bien, pues.
Yes, unfortunately we ran out of time. We have time for no more, but unless you want to say something.
No, simplemente lo que dije antes, que no.
No, I would just like to say it would have been great to have more time to go deeper into these topics, but it's been of great interest.
I want to say thank you to Rhyne, Blanca, Maria, and of course our moderator, José María. Thank you all very much.
Gracias.
Thank you. I'd like you to take a picture here. Thank you. Before you go, we're going to take a picture. We're going to take a picture. Thank you. Okay. Thank you. Well, in the program, while they're taking the picture, let me switch back to Spanish. I'm the translator. In the program, it says we have several stories. We're going to present you some projects that we are going to, okay? We're going to keep the program, stick to the program, but we have a little surprise. Was our guest leave the stage? Thank you. Thank you, Rhyne. Yes, we're working here, you know.
Well, we are now going to move to the last section of today's seminar. We are going to present 4 great projects, and I had a text to relate this to the screens, because we said from the smartwatch to the smart TV, have you noticed that we spend more and more hours looking at a screen? And whilst I was writing that, I looked around me and I had my mother-in-law watching TV, my husband on the computer, me on the mobile phone. These screens are a great opportunity, but they're also a great challenge for the financial sector. How can we present the information that users need in a simple, easy-to-use way and adapt it to the size of each screen? Is this a challenge or is this an opportunity? Well, we're going to see 4 projects in which BBVA is facing those challenges, and that many of us can see as opportunities. First of all, I bring a tool whose objective is to empower people and to promote financial education so that customers decide better on their personal finances, which is what we've been talking about all along. It's a feature of a service that's included in the Banco mobile app that uses artificial intelligence. It's called Financial Health, and is presented Salud Financiera in Spanish, and is presented by the Director of Evaluation and Good Practices at BBVA Research Mexico, Guillermo Jr. Cárdenas. Can you hear me? Perfect. Good afternoon. I'm going to talk about the history of financial health within financial health department at BBVA Mexico. Before I go into the topic, part of the strategy that we have at BBVA Mexico for financial education started in 2008. We have face-to-face financial education. Basically, we have trainers that teach workshops to people, to customers of ours and not, through the branches or in mobile classrooms with mobile equipment. We also have virtual financial education online workshops. We also have agreements with public and private institutions, and we have awareness campaigns about financial health through journals, videos, stories, bulletins, etc. In 2017, when nearly 60% of the population, of the adult population, started having mobile phones in Mexico, we created a strategy that was called Digital Financial Education. The objective was to put financial education within the bank's apps. So one of the first tools that came out was Checkup. Be Mobile at the time, that was March 2017. So based on the expenses, the revenues, and credit management, we told our customers if they were, we did a health checkup, whether did they have a very good, poor, or critical status. In March 2017, or rather in March 2019, we strengthened the way of measuring the financial health of our customers, and we strengthened the type of messages of financial education that we were delivering to them to explain the relevance of financial education. I've brought a healthy life process. So talking about physical, medical issues, the first thing that you need to do is to know your risks in order to have a healthy life. You need to, if you have family members with diabetes or obesity, or if you have a risk of any type of disease, you need to take out preventive measures. Either, well, I don't know, if you have people with diabetes in your family, then you have to be careful with the sugar intake. Part of this healthy life process are healthy lifestyle. Do exercise, sleep well, etc., etc. Moreover, you have to go to the doctor, you have to check your health status, keep a tag on yourself. And if you have any problems, you have to try and solve it, and then you go back to the beginning. It all starts again. So what happens with financial education, financial health? Financial health is similar to this. You need to know your risks. You need to carry out prevention measures, healthy lifestyle, etc., etc. Now, with the app, what we do is we measure or we give information about how the financial health is of the financial health of our customers. Based on that financial health, for instance, in terms of risks, we could say, well, you're having a high, you're becoming risky because you have too many expenses, or you've carried out important expenses, and we start sending them messages, say, identify the expenses that are a need rather than just a wish. Check your account to make sure that you can pay for that. So with the tool, we start identifying risks and sending messages to customers about those risks in order to try and prevent anything bad from happening. Also, we send them messages on healthy lifestyles, such as, for instance, continue doing your expenses. Spending properly, etc., etc. We could even have messages that, such as, for instance, try to reduce any expenses that are not a need, or use your credit card responsibly. Or imagine this checkup tool is linked not just to issues to do with expenses, but also savings, insurance, and investment.
Nuestro mercado objetivo son los clientes.
Our goal market, our target audience, are clients that use the BBVA app, clients that belong to the bank and personal segments, customers rather, that do not exercise their R-code rights, and customers that have minimum 3 months history with any of the products hired through BBVA. And we have, until May, 41,000 users of the application, which is important because based on the digital financial strategies, we're having higher coverage, and we're trying to focus the type of financial education for each one of these customers. That's one of the things that this app helps us do. Now, as part of the story, I have to tell you about the current team. There's been several people involved, people that participated in this project. We have Vianney Espinosa, who's a psychologist, 2 economists, Pamela Garrido and Pedro Morales, a specialist in education, Edna Morales, and a business manager, José Real. And then we have Carlos González's team, a legal services team, legal compliance team, seamless experience team, and TCR, which is transparency, clarification, and responsibility. They went over the information that we were going to send our customers. And these are the next steps. Obviously, we have to finish some details of the tools, particularly investments, insurances. Once the tool is 100% ready, we need to do follow-up to see what's going to happen in the future with these messages that we are sending to our customers. And as part of the project, we are planning to do an evaluation of impact. And finally, and this is something that's happening in general in the digital world, when we help a customer digitally, there comes a point when they have to either take out a loan or make an investment. And it's not in the digital scope anymore. It has to do with real life. So we're working there too to apply this to the real world. So customers have support in terms of financial education, but that's a different story. And thank you very much. Thank you, Guillermo. If we have time at the end, we can do a quick Q&A session because there's 4 of you. So if you have questions for Guillermo, please wait and we'll ask them at the end of the session. We've talked about retirement, longevity, about how we have longer life expectancy. It's one of the biggest revolutions of humanity, particularly in the 20th and the 21st century. Life expectancy has doubled. And this life expectancy has become longer, particularly during retirement, of course. I think José Manuel González Páramo was talking this morning about how we used to retire at the age of 65 and you had 10 years left, but now you have up to 20, 25 years in which you're very active, you're very healthy. Officially, you can be young until you turn 120 years old. So what happens now? We are all concerned about retirement, of course. As Fernando Tejada was saying before, the good news is that we are going to get there. We are going to live that long. So with this information and with this question about who's not concerned about retirement, I bring to you Future Planner, the new tool of BBVA to achieve the retirement of your dream, what we're all looking for. And it doesn't matter if you're a BBVA customer or not. This is fantastic. Do you want to know more? Otherwise, we can just go. Okay, if you want to learn more, the Commercial and Marketing Director of Asset Management BBVA, David Carrasco, is going to talk to us about it. Welcome, David. Well, thank you, everyone. I'm going to try not to go over time. First of all, I'd like to thank EduFin, of course, and Responsible Business of BBVA for giving me the opportunity to be here with you today, representing Future Planner, to tell you about this experience that we have created together with the digital transformation team, with Yolanda de la Cruz, Alberto Guillén, etc. Also with business development in Spain, Cristina de Burgos, or Jorge Villanueva himself, and the rest of the asset management team as well that have contributed to this initiative. I think it's fair to say that this initiative comes as a result of a piece of news that is probably one of the best pieces of news that humanity has ever had. And that is what you've already mentioned before this morning. The news is that we are lucky enough, all of us that were born in the last few decades, we are lucky enough to have a life expectancy that is almost twice the life expectancy that our grandparents had. Our relatives were born around the 1900s, and life expectancy didn't even reach 35 years old. In a little over 100 years, those 35 years old have turned into 83.3 years old of life expectancy. And this will continue because longevity, it's boosting and it has no limits so far. Children that are being born nowadays in this country, probably 50% of them will be alive in 2119. So these are the good news. This is the positive side. This longevity that keeps boosting, not just in Spain, but all over the world. But of course, there's always a downside in the real world. This is a challenge for people and for society as well. Why? Because social institutions that we have been relying upon historically were prepared and were established in the 20th century to serve a society that was closer to the life expectancy of 35 years old instead of the one that we have nowadays. What does this mean? This means that the challenge is huge. In Spain, for instance, out of 9.7 million pensions that we pay nowadays, we're going to have over 15 million pensions in 2050. I don't want to give too many figures, but let's just put this mildly. We're going to pay more pensions for a longer period of time, and it's going to be more expensive because people that will retire starting in 2025, the retirement of baby boomers, they will have longer careers, therefore their pensions will be higher. What happens? This is a monumental challenge. We are going to have an increasing number of people in their retirement age and fewer people between 15 and 64 years old that have to work. This system that was preconceived in the 19th century, 20th century, they will have to support the retired citizens that will live longer. So the problem is that people don't really know this. A few years ago, I was thinking about this, and we realized that people were concerned, but not busy. They were not doing anything about it. Mainly because it is impossible for someone to take action when you don't actually know that thing. And that's the reality in 99.9% of cases, at least in this country. People don't know when they're going to retire. People don't know what their life expectancy is, and people don't know how much money they're going to need when they retire. So if you don't have that information, it's impossible to plan in a quite reasonable way. That's why in 2013 we launched My Retirement. It's a non-profit initiative. It's completely free for everyone. And we haven't been investing in positioning or advertising. We've had over 400,000 visits monthly, over 600,000 views on YouTube, and over 5.6 million of users accessing our simulators. Then people told us, okay, I have the information now. I know what I want to do now. How can you help me do that? How can you help me own my own future and make my own decisions? And that's when we decided to move from information to action with Future Planner. What is Future Planner? It's a digital experience that is trying to help customers and help them project that future. It is hard to see that now because of the human biases that we have, but we are trying to provide them with saving solutions or make them make more rational decisions in terms of consumption and expenses so they can prepare for retirement. We launched the initial phase of this tool, what we call the discovery, that has differential factors compared to other similar tools that might be in the market. Essentially, how simple it is. And calculating estimated public pensions for the first time in a tool that calculates pensions coming from the Social Security is done without the user needing to introduce any single piece of data. Why? Because we have financial information. We know exactly the revenue of a BBVA customer. We know their age. So we can project and reconstruct and trace back their history back and forth to have an estimate of their pensions. The projection of this retirement is based on the results that each person wants. We don't get an estimate without knowing what my personal circumstances are, or my preferences, or my wishes. It would allow me to adapt to that future. Maybe someone wants to travel, maybe someone wants to go back to the village where they were born, maybe someone else wants to spend time with their family, or maybe keep the same lifestyle that they had when they were working. On top of that, it also helps us work on that future that we dream to have, not just in terms of revenues, which is something that financial institutions are really good about. We're great at asking people to give us money to manage their savings, but we're not really that good at helping them not consume excessively, not to spend too much, to reach that future that they want to achieve. And finally, helping them and provide them with a financial solution. So far, every single tool that you've had breaks down this entire process in pension plans. Well, we started to open up our minds and we let customers choose in which way they want to save. Some people want to save with pension plans for tax reasons, but some people want to do this in investment funds. Some people want to save in a different way. Obviously, this is an MVP, which is a discovery, and we started with investment funds and pension plans based on the liquidity or the tax characteristics of the solution. And based on that, future deliverables, we will be adding more factors. What are the future planner results? You can see this on screen. We started deploying the tool at the end of January, first few days of February in different mobile platforms and different web platforms. By the end of February, it was publicly announced, and it was included as the initial experience within BBVA website. If it's the first experience, it means that more people click on it. It's sort of a scorecard where you can move it around, and you will get more clicks depending on your situation. And in March, it was the first experience to... in May, it was changed and moved to the 5th experience to give priority to other experiences. This is very interesting. The minute this is categorized as a first experience, we have plenty of visits. Usually, we have between 100, 120,000 visits per month. So our results mean that we had 376 users access this. And 92% of the access is done through the mobile phone. So let's do a brief demo, if you're okay with that. Let's try to do it here in real time. There we go. Okay, let's go to Future Planner. Let's click and start. I'm going to start the experience all over. Let's start with the work situation. This is just an example. But I did not have to introduce anything. It's obviously giving me my salary. In the case of each one of you, you will get the information customized. So it's already telling me how much income I'm making every year. Then how many years I've actually been working and paying taxes. Depending on how many years I've been paying taxes, taking the information from the Social Security system, it will trace down my work history. And based on those years, the system will also predict how many more years I have to work before I retire, and then define when legislation is going to allow me to retire. All those data are actionable by the user, meaning that maybe I have income in other financial institutions that BBVA doesn't know. Well, I can modify that. Maybe BBVA, maybe I've had some gaps in my work history and BBVA doesn't know. Maybe I don't really intend to retire at 65. Maybe I want to retire at 80. What's the second piece of data that it provides? An estimation of my monthly expenses, it estimates that I'm going to spend 4,100 euros a month. It takes my current expense patterns and it takes that to the expected retirement period, and then it does a comparison of my current expense taken to the future with the socioeconomic profile of people that are similar to me, but that are 65 years old. Why? Because the way we save and spend money when you're 25, when you're 40, or when you're 60 is completely different. So it does that comparison and that estimate, knowing that the need for income goes down usually when you retire because your kids no longer live with you, and also because if you are paying for a mortgage, you already paid for that by the time you're 65. And thirdly, it takes information from my saving tools. And it tells me if I plan on having some other tool, for example, selling a house that is not compiled here, or some sort of windfall for the future that it should take into account. So with all of this, with these estimations of future expenses and investments, it does an estimation. So far, I haven't had the need to introduce any single piece of data. So it says, what is your public pension? What is the expected public pension, which is 2,428 euros? Additionally, with the amount that you had been saving for your retirement, you will be able to have monthly additional income of 1,149 euros, but that will be compared to the expenses that you will have, which I said are going to be 4,000 euros. In this case, I need to save an additional 500 euros a month to achieve the future that I want. So it allows me to adjust either expenses or revenues based on the estimations that they made. Let's say that I want to save a little bit of money and I don't have the capacity to save, I don't know, 500 euros a month. I can only save 299 euros a month. Well, what does it say now? It says that I will have I would have saved 65,000 euros, and 2,100 will be due to this estimation. So I will have a monthly net income of 3,735 euros a month. My needs were 4,100, and 2,400 came from the public pension, 1,000 came from my savings, and 245 from these new contributions. And I say, okay, this is interesting. Let's move forward. And then we can see all the different plans and the solutions that might be right for me. Well, this is a pension plan that expires when I will have to retire in 2030. Maybe I'm interested in this, or maybe I'm not interested in this. So if I'm not interested, what are my other options? Well, depending on whether I invest a lot, if I save a lot, if I'm moderate, if I have a conservative profile. But there's also another option, which is I don't want to have a pension plan because I don't like the liquidity that they provide. I'd rather save in some other tool, like an investment fund. Well, I also have the possibility. You can go to BBVA Invest. And there's a regulatory issue here, MiFID II. We have to pass a test, and then once those 12 questions are answered, I will get a number of options, and I can choose whatever works better for me, whatever is better for my needs. And in just 2 clicks, I'll be able to hire the product. And that's Future Planner. Thank you very much. Thank you, David. I loved it. That's wonderful. I almost want to start using it now. It's free, right? Yes, it's free. Okay, that's the first thing you should have said. Excellent. If you have any questions, I saw many people taking pictures. We can ask him questions later. But this is a wonderful tool, and you were on point. You were just going through the whole thing. It was great. Wow. Okay, now I'm going to ask you to think about a hero. A hero. Let's come up with, I don't know, I have kids, so of course the Marvel superheroes, Spider-Man, Superman, Wonder Woman, but there's plenty of heroes, and they all have a single goal: improving people's lives. So, without further ado, I present to you EduFin Heroes, which is an interactive training experience of the Microfinance Foundation of BBVA. It's a program that, through gamification, teaches the social work of microfinances. It shows firsthand the day-to-day activities of low-income entrepreneurs to train and learn how to help them. And to tell us everything about this, we have the person responsible for campus microfinance and culture from the Microfinance Foundation BBVA. Let's give a round of applause for Fabian Goldberg. Welcome, Fabian. Thank you. Thank you, everyone, for having me particularly. Thank you to the organization that allowed us to come here and tell you about our project, also what the foundation does, and how Heroes helps our entrepreneurs to achieve their goals better. In the Microfinances Foundation for BBVA, we work so people that are in vulnerable social and economic situations can access the financial system, so they can improve their quality of life and their family's quality of life. This is the main goal of the foundation, and also the reason for the other 6 entities that operate in other countries in Latin America: Colombia, Peru, Chile, Panama, and the Dominican Republic. But of course, we have an entire process to maximize our impact. So what we have defined is the productive finances model, which goes well beyond the provision of financial services in a traditional way, such as microcredits, for instance, that you might know. And it adds to the value proposition, advising, financial education, and also support, so these entrepreneurs can make progress through what their businesses generate. This is very important because we only focus on production activity, so their businesses evolve, and therefore the entrepreneur can make the best decisions possible to help improve their life quality, to send their children to college, for instance. Another key pillar of this model is long-term relationships. Our colleagues that analyze and create this social performance report tell us that the longer a customer stays with us, we don't actually call them customers, we call them entrepreneurs, the higher the probability that they get out of poverty. So there's quite a symbiotic link here between the advisor and the entrepreneur. And I'm going to show you a video so you can see how that relationship plays out. It's a very emotional video. And let's show it now, and then I'll continue talking. I don't know if... Yeah, there we go.
Levantarse muy temprano es duro.
Waking up really early, it's really hard. But when you see the effort, it's very rewarding. Every day I get up, I have breakfast with my family, I go out and I go see my customers. In Latin America, there's millions of people that live with under $3 a day. That's why we help them, so they can make progress in their businesses. All thanks to our customers, because they give us whatever they can. How the life of others can inspire our lives. I'd like to thank Gabriela for her dedication. Thank you, Karen, for being so affectionate and helping me so much. Thank you, Rosa, for teaching me that we can put projects forward with perseverance. Thank you, Humberto, for all your support. I'd like to thank José Miguel. Without him and without his help, I would have never been able to put my business forward. If you put the effort and dedication, you can accomplish whatever you want. Thank you for being so consistent. Thank you for helping me. My dream is for my kids to go to college. My kids is to provide them with a better future. My dream is to make my business bigger. My dream is to make sure that my daughters finish their studies. Thanks to this foundation, we have made a lot of progress. Thank you so much. Thank you. 5 million people have been assisted. Over 4,000 loans a day, $12 billion. 60% of the entrepreneurs are women, 80% of the customers are vulnerable, 8,000 employees. There's 8,000 employees in the group, but over half of these are precisely advisors. And they really are the soul of this foundation. They're the ones that apply our model and work with the entrepreneurs. These are some of the examples of where they have to go. It's a very hard job. It entails a lot of commitment. It's very complex. On a daily basis, they go see plenty of customers. That means that there's many different plans and lifestyles. They know everyone. They're very sociable. And of course, they do whatever they want to get to these places. Sometimes they have a motorbike, sometimes they don't. Sometimes they have to walk, or it's not easy to get to these places. So it's not easy either to be available to receive training in some situations. So it definitely was a challenge. We couldn't apply traditional training here because they don't have the time. Reading documents is quite old-fashioned. So we found out that the gamification line of work allowed us in a very agile way, in a very innovative way, and fun way also, to reach these customers. And so whenever they had the time, when they're sitting down with their tablet to wait for a customer, for instance, they can receive those messages and receive training. The first approach, the first project, was called Simón. It's sort of like the Amigotchi, like the old Tamagotchi. It's a person. It's an actor from Venezuela that is in your phone. For 33 days, they lived 24/7 in your phone. And the first target of the project were the branch managers. They were over 700 branch managers. Simón asks you questions about your daily life. We made sure that the cases were very real. It's not theory, it's all practical cases. For instance, why isn't your colleague helping you? Why they left because they wanted more money, because the competitors offered them more money, for instance. So they need to learn how to handle these things. It is a very successful program. It was acknowledged with a couple of awards, actually, in terms of innovation, in terms of social initiatives. And again, very successful. People start to demand more and more things like this. So we went a little beyond that, and we actually did something much more ambitious, much more oriented towards this group of people that is so important for us, advisors. The microfinance industry has quite a high turnover rate. There's plenty of people that come every year and join the group. So we really needed to know how these people can really learn in a very quick way how we do things here. So through this game, which is sort of an interactive experience based on videos that were recorded, we got these people to play. We developed a program, they started playing, and in this way they learn in a very quick way when it's good to teach basic accounting or how to teach the customer to do a budget and use it, as we were saying before. When we need to explain the risks of going into debt, for instance, which are sort of the villains. If we're talking about heroes, that's the opposite, excluding people of the financial system. We also teach them that we're not providers of products, but we want to generate a plan for their lives and give them tools to help our entrepreneurs make the best decisions.
This program to create it, we shot it in Colombia in a house provided by a rural entrepreneur, and we did casting. These are actors. We asked them to take on this role, to really fill in those shoes, and this couple did it really well, and something that's very realistic came out of this. If we have time, we'll show it to you. It's only a couple of minutes, and I think they did it really well, really well. The name of heroes. Why? The people ask me, why heroes? I don't know if you have an idea of why that name was chosen. The truth is that it's obvious that entrepreneur is a tribute to our entrepreneurs for the huge effort that they carry out day after day in order to make sure that the families go ahead. And we know that also the advisors and the managers are heroes too. So it's the coming together of those two different types of people. That's why we gave it this name. I'm going to show you now the video that we used for the launch of the campaign, the program. The program has been in operation only for a month, but it's had a great success. In fact, they've called us from TV, from radio. We were even at national TV channel, and it has been awarded with a couple of prizes for innovation. Also, the Internal Observation Communication Observatory and the Sesgos Group have awarded us with those prizes, and it's quite good because it's only been for a month. I think this month we already have over 500 players who've participated, and we hope that in a year we'll be able to cover the 8,000. So I'm going to show you the trailer that we used for the launch of the campaign, and then if we have time, which I hope so, then we'll be able to play maybe.
Pasamos.
And now, if possible, let's go to the computer screen. I'm going to ask a colleague, Leora, who's sitting there, to be the player and to help me with the answers. So the game looks like this. We have 6 different levels. It's the story of Alicia, a rural entrepreneur who has a loan with someone who gave her a loan, and she's very committed to making sure her family makes it. So the first level is very funny because you really feel like you are on the shoes of this person, and And you see her daily life, how difficult it is. From the second level onwards, then you become her advisor in order to help her come out of her situation and evolve. So we have a ranking. There's a ranking, obviously. These are the 6 levels. And there's also kind of social media, specific social media for the game, because they can compete amongst them from different countries. So let's look at the first level. In her shoes. So it starts with a very kind of quiet song explaining certain things about the game, the options, the life. It adapts. Well, it basically gives us the methodology to get to these people, okay? It's just really quickly. It's not boring.
Nivel 1, entonces.
Level 1, put yourself in my shoes. 1 day in the life of Alicia. So here you can see the player view. So you can imagine that you are her. So this is her initial situation. 15x per day as revenue, 150 fixed asset, 10 chickens, and we can see the amount of units saved, etc. Good morning. I've come for a dozen of eggs, but I see you don't have many eggs. Oh, your kid's cough is terrible. Doctor should check on that before it gets worse. Do you have any more eggs that I can take with me? So the first question is very simple. Should I sell the eggs or not? They are her home's eggs. So is she going to sell her own eggs or not? I would sell them. Yes? Okay, let's sell them.
Muchas gracias, vecino.
Well, thank you very much, neighbor. I'll see you later and make sure you look after that cough. So now you have less eggs for your family, but otherwise you would lose a client, right? A customer. So there's always something good, something bad. There's always consequences to everything we do.
Buenas.
Hi. I'm bringing you the supplies for the store. Rice, coffee, flour. I'm going to put this on the shelves. I found the guy that gave us the loan. We didn't pay last week, so now we owe him more money. He said he's going to take my bike away. I said, what do you mean? I can't be without a bike. How am I going to go there to pay you if I don't have a bike? Do you remember that real estate, the big one, on the way to the village? They're paying to go and take all the, to do some pruning, cutting and pruning. What should we do with the amount that we should have already paid? So you pay with your saving and with what your husband wins from the cutting and pruning. You give the guy the bike, or you sell 4 chickens. I'll sell 4 chickens, plus the work of my husband for the cutting and pruning in that real estate house.
Porque al vender 4 gallinas estaríamos mermando los activos.
Well, bad, because if you sell 4 chickens, if you're giving them the 4 chickens, then you're losing your revenues in the future, obviously.
A medida que uno responde se van modificando las variables, ¿no? Ay, le erré. Perdón. También está mal.
So that one would also be bad. Selling the bike is even worse. Without the bike, he can't buy the merchandise to then sell in his store. So what about if we use our savings? Well, then if we have an emergency, well, we'll see what we can do. But look, we need to provide the store with some supplies. Otherwise, the few customers that we still have will leave. Where are we going to get the money to supply the store.
¿De dónde la usa?
Where from are we going to get the money? It says you can ask for a longer maturity, you can sell more chickens. No, I'm going to ask for more time. Okay, I'm going to go and do the cutting and pruning that I mentioned before. Mom, I don't feel too well. So I'll take him to the doctor. But to take him to the doctor, you have to pay for a taxi, you know, and you also have to pay for the doctor, so your debt is going to go up.
Esta es mi vida.
This is my life. Some days are better than others. What's important is I want to make sure that my family goes ahead, but it's difficult. Put yourself in my shoes.
Pues nivel 1 completado.
So level 1 completed. A big round of applause, and the game goes like this. Well, Fabian Goldberg and Heroes. Really good. Really good if it wasn't, because this is not just a game. This is the real life of many people. If you have any questions for Fabian, let's see if we have time, because we have a last project to present. The fourth and last project. Today we talked about the importance of controlling our accounts and how easy it is to do this with the digital advances, but it's not always so simple. So the last two people are going to talk about Programa Tu Cuenta, a tool that will allow you to control your accounts finally. So to give us all the details, we have Luz Martin from Digital Transformation Spain, BBVA, and Ana María Hernández from Design Spain, BBVA. So Luz and Ana, a big round of applause for them. They are the last ones to present.
Muchas gracias y sobre todo gracias por
Thank you very much, and thank you for staying so long. In fact, so you don't fall asleep, and to make sure that you're going to be awake until the end of the session, I'm going to ask you some questions. How many of you have programmed your VHS video machine? There's some very young people here. I guess some of you don't even know what a video player is. How many of you have a thermostat at home, so you can choose the temperature in the room instead of doing it with your, and you can do it instead of doing it with your fingers? And who goes into a room in your house and there's domotics? The light comes on automatically, or the shutters go up or down depending on the sun. Well, automation is very much integrated in our daily life, and it really helps us and it makes things easier. So why not do the same with our accounts and with our savings? In order for you to know, Programa Tu Cuenta, very simple rules so that we can customize in order to automate certain tasks that otherwise would mean that we would have to pay attention to our accounts, and secondly, would have to do it manually, recurrently, and that takes time. And why automate? Why have we decided to create this feature? To give you some context, at BBVA we create experiences based on data, as you saw before, in order to help our customers make better decisions. For instance, we have the Mi Día a Día tool where we can see all our movements classified, so you know if you've spent more or less in electronics, household, food, and you can make your budget based on those categories to control expenses. Also, we have movimientos previstos that allows us to anticipate to our needs, because we know what movements or what transactions are going to take place in the ongoing month and the month future. And Economy is a financial health tool that tells us what's your current financial health and what would be your optimum financial health. But there's one thing missing. What we were missing is how to activate those saving mechanisms, those checks and balances, how to start creating a savings discipline, and that's what we wanted to do with Programa Tu Cuenta. We've tried to cover those needs. On the one hand, account management, the account health, and on the other side, savings, because a large percentage of customers, as Anna will tell you, told us that they need to save, but that they didn't know how to start, really. So we're going to look at the rules. There's only 6 rules, so it's going to be very simple. Let's put the mobile screen. Okay, so for balance management, we've got 2. We've got minimum balance, so that's a minimum balance we establish in one of accounts, so that when you are below that balance, then automatically from another of our accounts, we'll fill up that minimum balance, and so you will not go below certain thresholds and will be able to face certain payments. So if you know that in one of your accounts, you have, the one where you always pay your bills, and you have a total of 500 euros. So if you know that most of the bills come out to be about 500 euros, let's make sure you have always 500 euros there so that you don't pay late. Also, maximum balance, that is the opposite. If you know that your monthly expenses are not more than 2,000 euros, then anything after those 2,000 euros can be transferred to another account. So that's the maximum balance. So you establish yourself a maximum, and what you don't use can be transferred to another account. So that's for balance management. Then we have 4 rules to save. With these rules, what we try to do is to cover a little bit the savings behaviors in our customers. For instance, there are some customers that prefer to pre-save. How many of you leave out a specific amount at the beginning of the month and put in a saving account, and the rest of the month they use whatever is in the checking account, but they've already put money away? That means pre-saving, and that's what we've done with a percentage of your salary. So what that rule allows you is that as soon as your salary comes in, you can put a specific percentage to another BBVA account. Then there's other people that what they want is to make sure that all the money is available during the whole month. They feel safer having the money always available. And at the end of the month, if there's anything left over, they devote a percentage of what's left of the revenues minus expenses, and they save it. They save that percentage. That's at the end of the month. Other people prefer to control their expenses throughout the whole month. And the way to do that is through the budgets that we mentioned before. If you give yourself a budget for electronics or for food or whatever of 100 euros a month, and then you only spend 80, what happens with that extra 20 euros? Normally will stay in your account and you would spend them. Well, this rule allows you for those 20 euros extra that you didn't spend from that category to go to a savings account or another account that you choose. And then we have the most typical behavior. Most customers go for this, which is to save depending on the change that you get from after you buy something. In the past, when you paid with cash and the change that they gave you, you used to put it into a little pot or anything. So now what we do is it allows you to do the same, so that you can, if you pay with your card and it's 5.80 euros, it will go round up to 6 euros, and that 20 cents will go straight to your savings account. And let's look into that one in detail. So when I pay with this debit card, I'll save it into this account. So I choose the target account where I'm going to put all my savings. It says that according to last month's expenditure, I would be able to save 982 euros. Well, I think I can multiply that by 2 and save 20 euros a month. Okay, so I create the rule, and that is it. Fantastic. I'm going to show you what happens when I have a rule that has been established for a while. For instance, I can see everything that I've saved and all the movements generated by this rule. Not only that, it also sends me notifications with good news, because it says you applied this rule and you've saved 9.80 euros. So it's quite motivating, really. And Ana is going to talk to you about how we created the Programa Tu Cuenta, this program, and how we've helped the different customers. So how did we design this program, Tu Cuenta? So we took into consideration the customers before, during, and after launching the program. Just like in all stories, this one starts with a also short story. We did research at the beginning with just a few people. One of them was called Sara. She's a nurse, a BBVA customer. And what she told us is that her main concern was control expenses, costs. She didn't want to spend too much, and she was heavily concerned with how to face sudden things that could happen and that could lead to greater disbursements, such as your car breaking down, having to send your kids to a summer camp, etc. And after Sarah, we had Fernando, Maria, up to 1,900 customers came. And in the end, we realized that all of them shared those same concerns. I want to control costs. I want to be able to face those unforeseen circumstances, and I want to save, but many times I don't know how to do it. As Luz said, we also realized that not everyone saves in the same way. Some people prefer to save a percentage from the salary right from the moment they get it. Other people prefer to see how the month ends up, and depending on how the month ended, they see whether they can save or not. Other people prefer to do a weekly control of their expenses and control that saving weekly. With the Tu Cuenta program, what we wanted to do was to cover all those needs, to meet all the needs that the customers told us. And with the rules that Ruth mentioned, the objective really is to give them these tools, give these tools to the customers so that they can do it themselves. And the truth is that it's going really well. It's going really well. We brought some examples of what the customers are saying about the Tu Cuenta program, and they tell us things such as, I really love the new design of the app. It's great how you can save without realizing every cent counts. It's a great idea to be able to program tasks and actions. It's really useful. And this last one, I brought it specifically because sometimes customers themselves define the program better than we do. This client defined this the rule of the change when you go to pay in a store. He says, we all give tips, and this is a way of giving a tip to yourself. And now we have about 40,000 rules active, an average of 1,000 rules per day active. And we have our top ranking, given that you're a little bit tired, probably by now. What do you think is the most activated rule? The rounding up, when you go and pay in a store. What else? You were right. Perfectly. It's true that for us it was a bit of a surprise. We thought that the percentage of the salary or the minimum balance would be the most attractive ones. No, but the roundup has 16,000 rules active. That is data from 2 days ago. Followed by a percentage of your salary, a minimum balance, maximum balance, saving at the end of the month, and the last one is saving based on budget. Because I think people don't put themselves so many budgets, I guess. And the story doesn't end here. After launching this program, we continued receiving feedback from customers. We've received 5,000 reviews through the mobile app and through the internet of the things that we've launched, and over 500 comments. And what do people tell us? What do they say? What are their suggestions? Basically, they tell us how to continue evolving the Tu Cuenta program, what we could do. They tell us ideas. For instance, why cannot we apply Roundup not just for the debit card, but also for the credit card? Or why can't we devote that saving, why can't we transfer it to our investment fund or to a retirement pension plan? Or why don't I see not just what I've saved the last month, but the total amount saved since the rule was applied? And to finish, we don't want to take too much of your time anymore. I would just like to say that what's important and what we face every time that we have to change the design, what we want is to provide value to customers. And this can only be done if we count on them, if we take them into consideration before, during, and after the design process. So at BBVA with Programa Tu Cuenta, we finished kind of the cycle. We've moved from just purely information programs to activating certain savings processes, etc. Something that we think is very useful for everyone. We hope you liked it. And if you're customers, we hope you use them. Thank you very much. Thank you. Don't go yet. Don't go, Luz and Ana Maria. We asked David, Fabian, and Guillermo Jr. to come out, take a picture, because these are wonderful projects. You presented some wonderful projects. So Guillermo, Fabian, David, the 5 of you. Thank you very much. Let's give a round of applause to the 5 of them. Great ideas. Fantastic initiatives. I don't know if there are any questions for any of them. Well, if you have to keep it to yourself because there's no time. I was just curious to know, that's all. So now the exit, make sure when we finish you don't go straight away, so that given that there are questions, they'll ask them to you directly. We also have the whole BBVA team here to help you. So thank you and congratulations to the 5 speakers and the 4 projects presented here. Thank you very much. I'm really sorry, but I think it's better to leave you like this on a high note, we could say. We've run out of time, but there's one thing that I'm thinking about here. Normally when I'm hired to be the presenter, to be the host, normally I can summarize normally my role is to also summarize the panels, but given that the moderators did it so well, I was not able to summarize it, and I didn't have enough attention as I should have had. And so I have this wonderful notepad, and I've taken a note of everything just in case I had to summarize the panels, but it was not necessary. And so I thought, I'm not going to leave here without doing my own summary. So I decided to summarize into 10 bullet points the whole day. What do you think? Can I do it? Of course. Yes. Yes. Bullet number 1. We started the day with José Manuel González Páramo, who spoke to us about the challenge of financial education and the universality of it, because it affects us all. And he told us already that the Center for Education and Financial Capabilities is active and that is a reality. Then we've continued with I correct myself, with FloreAnne. FloreAnne told us many things, but I decided to choose one. Digital means new ways of doing business. She's translating it right now. And she has given us lots of examples. Then we continued with Fernando Tejada, who told us many great things, but just one thing that I would like to tell you, that he said that digitization, I can't even say that word in Spanish now, digitization has come to stay, but it is a slow process.
Nos habla de unos retos, de unos beneficios.
He talked about challenges, about benefits, and then Veronica Lopez talked about plenty of things, but she especially emphasized the fact that we need to send the right message about the path that we need to go down with financial institutions to prepare people with financial education. Rolando Arellano told us plenty of experiences in Latin America, but particularly he emphasized the basic aspects, which are 3: know, want, and take action, not the other way around. Let's not get carried away. Let's first know what we want, then know if we want it, and then take action. And accelerating the credit process without being educated in digitalization, we will be led to financial inclusion. Then I have plenty of information. Look at all the pages that I have. So many notes. And then we come back to Raymond's shoes. We cannot forget about his shoes and about the fun quiz that we did. There's very smart people in this auditorium. I, of course, copied my answer from Lydia, who got the 3 questions right. Many people got the right answers, but this quiz is very hard. Plenty of people don't know these 3 main principles the European money quizzes what the European Banking Federation does. What else? We have Maria, who gave us a lot of information, but in the end, she said that sentence that it was the star moment about digital savviness is not financial savviness. And we talked about the examples for millennials and how much they know about digital topics, but not so much about financial topics. Blanca Narvaez talked about the results of a very interesting study. I got depressed as a mother because I realized all the mistakes that I'm making, but I'm learning. And she also talked about the importance to include financial education in schools in a crosswise way, which doesn't happen, at least in Spain. So she really made that wake-up call for us. And finally, Rhyne talked about the importance of implementing education as part of the school day. Kids are not going to leave school and go study financial issues. They have enough to deal with. And finally, BBVA brought us the social projects and programs that they're working on to, as we said in the beginning, have a positive impact on the lives of people. This was our day today. Good news is that we're done, and better news, there's more to talk about tomorrow. So thank you, everyone, for being here. We're meeting here tomorrow at 9:30. Thank you.